Welcome. My name is Dimitris Dimitriadis. I work as a futurist in the Special Secretary of Strategic Foresight in the Hellenic Republic, and I will be your host for the next 2 days. And together we are going to explore the future. We are going to explore the future of decentralized finance, of blockchain, of all these new technologies that shaping the future as we know it. We will start with the opening remarks. First, thank you that you are here, and we want all of you to contribute and be present in all the sessions. We have a lot of workshops. We have things from the very starting in order to understand these new technologies, and we have also more advanced things about digital governments, decentralization, DeFi payments. We try to cover all the information space in order to understand the future and to anticipate the future and be better prepared for all these changes. So I will start by calling on stage President of DCN, Professor Nicholas Panagiotou, for the opening remarks.
Good morning, everyone. My name, give me just 1 minute and I will take the mic. Okay, welcome everyone. My name is Nicholas Panagiotou. I'm president of DCN Global. DCN Global actually, together with World Learning, is hosting this event. But before actually saying a few words about the event itself, I would like actually to thank a lot our partners and our hosts here, Municipality of Beinoğlu, thank you very much for all your effort. University of Kent, my colleagues here that they are sitting in the front row, Professor Pehivanoğlu, as well as Semre, and I would like to thank them for hosting this event and underlying actually the importance that this university places in such a topic. And having you as well as the students with us, it gives a lot of incentive in order to discuss further a topic that we know a lot, but we actually sometimes we don't understand that many things. So through this event, actually DCN Global aims to put at the forefront a discussion that is dominating the space, especially this year, about decentralization, about new frontiers in technology, about a future that actually it's not a distant future that much, but actually it's much more a present that upon which our future is constructed. For me, being a child of the generation of 70s, being here and discussing about something that it is decentralized, something that it is blockchain, it seemed like a dream actually. I couldn't imagine myself that I couldn't have something that it is like a coin or something that you can touch and feel about it. But here we are, and probably we are at the doorsteps of a global conversation that we, as actually a global organization, try to highlight and provide meanings and understanding. Because this is what change is about. To understand, acknowledge it, accept it, and use it. This is what it is going to be at the center of our today's discussion. And once again, I would like to thank our DCN Global members team that managed actually to bring all of you here and actually to initiate such a very important discussions and event from all over the world. Thank you very much.
And now I want to call on stage for the opening remarks Mr. Murat Pehivanoğlu.
Dear participants, esteemed colleagues, it is my great pleasure to meet with you at this opening session of the Navigating the Future Decentralized FinTech and the Digital Frontier Forum. Istanbul Kent University is one of the organizers of this event, and we are grateful to our partners, DCN Global and Beyoğlu Municipality, for their leadership. Likewise, I would like to thank our team at Istanbul Kent University for their continuing support, and especially my colleague sitting in the first row. Today and tomorrow, policymakers, professors, professionals will be joining us both online and in person to discuss and comment on our digital future. Our speakers will be focusing on security and transparency points and share their views on recent developments about decentralized systems. This forum is an international event and will be hosting speakers and participants with various education and practice backgrounds, including law, business, computer engineering, political science, and journalism. Dear participants and colleagues, we are here in this event because we know we must do more to build a better future for our world. Democracies around the world are facing a crisis of legitimacy. This crisis will become worse if we do not work for a more transparent world by eliminating excessive financial secrecy, and if we do not fight against disinformation by strengthening our ability to make informed decisions. This, ladies and gentlemen, is not only my own opinion, it is also an opinion shared by some leading experts. Technology, including digital transformation and decentralized systems, may help in curing this legitimacy crisis and create more trusted governments and private institutions. This is why, as a legal scholar working on corporate transparency matters, I am personally very happy to contribute to this forum and help to raise public awareness about these issues. I strongly believe that the discussions at this forum will help our participants to envision new roles for technology and decentralized systems, and eventually support them in building a better world for all of us. This forum is also an opportunity for our speakers to consolidate their thoughts about their area of expertise by hearing from participants and other experts on the field. Dear participants, on behalf of Istanbul Kent University, I thank you all for being here, and I send my best wishes for a very successful and rewarding forum. I am looking forward to seeing you once again tomorrow in my own speaking session. Thank you.
Thank you very much. So before we go to our first keynote, in the casual sense of all the conferences and forums and hybrid forums of DCN, I want you to ask you to stand up, don't be shy, stand up in order to break the ice a bit. I know it's really early in the morning, and I want you to stretch your arms and reach the person in front of you in order to touch him. Yeah. If you can touch him and start massaging the first person. Do it in order to be relaxed. Super. And now, because I see there is distance, you can switch to the side. Yeah, like that. And do it again. Better. Yes. Don't be shy. Super. Now that you are relaxed and ready to start the sessions, you can take your seat and give a huge warm applause to our first keynote speaker, Ahmed Yusuf. Ahmed is a pioneer in his field, and we're really honored that he is here. Ahmed, you can take the stage. Are we ready? You can use
Okay. Thank you. It's going to be hard taking. Good morning. Good morning, Istanbul. And good morning, Kent University. Thank you for having me. That's better. So, long time ago, I'm not going to tell you how long ago, my daughter told me, "How old are you, father?" I said, 30 years old. And she said, "You must have seen the dinosaurs." So, looking at her statements, comparing through, she said that when she's 3 years old, and I was 30, the gap between 30 and 3 for our lifetime is not long. But in the digital era, in the digital world, this is a centuries, very similar to what she said. But what was striking is that the way we look at our life compare probably, there's some people in the room here, myself and the others, we call ourselves the digital adapters. The one who were born before this digital era, before the technology was embraced, iPhone, before the era. These people, they can call themselves this title of digital adapters. But going forwards, there is the digital native, which is Gen Z and more. But we are actually approaching more advanced era, the era of the emergent technologies, blockchain, and AI. So by showing of hands, how many of you have used AI in the last week? Wow.
Or in the last 5 minutes.
Exactly. And how many of you in the last week have used blockchain? That's what I expected. So blockchain as a technology is one of these technologies you can call it general purpose technology. Once in our lifetime or once in generation, something will happen like blockchain. AI, it's becoming mainstream that you can use it in translation, you can use it in direction, you can use it in suggestions. It's became an application. But blockchain is exactly similar to the era of the internet. When the internet started in the 90s, similar question would be how many, if you ask this question in 1992, people would not understand. So I'm going to just, for the purpose of the audience here in this room and around the world, just give a quick overview of what is blockchain, because I understand there's a lot of people who knows what blockchain as a concept, as information, but they have not used it in the daily basis because it's not mainstream yet in a sense. Of course, we have digital wallets, we heard of cryptocurrencies and so on. But in general, talking about blockchain in the sense of information, in the sense of applications, is a lot more harder for those who have not touched it. They have not used it. So we are in the stage of the protocol development, the stage of what is blockchain could do. And there is applications have done there's some application that it's already been done in the space that we are going to highlight. But in general, considering today's, our digital age call for governments. I'm highlighting governments because it's very important. This area have not been touched. A lot of people are skeptical of how government can use blockchain, while blockchain is only for cryptocurrency, this is the biggest misconception. A lot of people understand this. First of all, there is this rivalry between the people who use cryptocurrencies and the government, the regulators. They don't want people to. Blockchain is a lot more than that. Just like defining the internet by saying the internet is the email, which is very limited descriptions. blockchain is a lot more bigger. So we wanted the government and to balance their transparency and security and understand how blockchain could be used in the daily applications, that it could, become a mainstream, and regulate and help balance the other side as well. So bridging the gap, just like I said, there is the people who are adapted to technology, people who are native to technology. There is a gap. And this gap, it will be, between the world that, what we can see the world and how we can see it right now, and how we could be in a way of embracing this technology. So envisioning the solutions, envisioning the application that could be built. There's a lot of experience, and actually I was doing my research for this talk. I learned that there's a lot of application has been done here in Turkey, like the digital wallet implementation, just like it has been done in other parts of the world. So there is steps going forward. And the news also came out of certain area like BRICS, for example. They're trying to identify BRICS Pay. It's an application that built on the blockchain. But just generally, think of the blockchain as digital ledger, a database that's shared, at the same time has everybody's be able to see, to write to, without manipulating or editing or changing, for the benefit of security, for the benefit of the transparency and integrity of the data. And so the power of decentralization for the government come in the data. When the government is trying to think of a citizen-centric data sharing and data integrity and trust and security. We hear a lot about security breach. We hear a lot about security challenges. We hear a lot about challenges with systems that is too old, too challenge for government to update because it's costly, but at the same time, it's vulnerable to a lot of things. So blockchain has the ability to help the government to scale, at the same time to be a citizen-centric. Imagine this with the example of the e-governments of Turkey and have the digital wallet for digital identity. Imagine if every service became a branch from this service where you log in and with your app and you have all your information, but you own your information. You're going to university to apply for university. You don't have to go through the process of bringing all the documents and the paperwork because all your information is already saved somewhere. But you are, with permission-based, you can allow whoever needed your information to give them permission to access this information. Your health record, your data about your education, the past previous educations. You're sharing this information with the proper authority. So why does it matter? Why governments need to use blockchain? What is the need for blockchain for the government as application? Because blockchain have the ability to bring to the services, bridge this gap between the decentralized documents, decentralized systems, and the centralized system. So you have one entity that could have a centralized system, but when you have a multiple decentralized systems, that they can share information freely, because we all deal with government, deal with applications in government. They have one challenge, that they think they own the data. They don't want to share it with anyone. They don't want to give it to anyone. So that's while it's one government, each department or each government agency they own their own data. And this data, for example, your phone number would be written in one government agency with the area code or start with 0, and in different area without this information. So this challenge create a barriers of how the digital identity, for example, could be a challenge. But in general, this could be a great chance for future solutions, future application. There's a lot of young people in the room here. The thinking about government service in the blockchain, this is the frontier that we are trying to achieve. There is a lot of things has been done to impact governments around the world in the area of blockchain, to reduce the cost, to enhance the trust between citizens and government and data sharing in that regard, and bringing more scalable systems that could help with that. So how blockchain could improve integrity? So decentralized systems has the ability to prove, blockchain from one regard is a decentralized system, has the ability to bring the data integrity into our applications, into our systems, into our daily life while using this application, and increase the public trust with the will make harder for bureaucracy and corruption, because most of the government challenges is rely in these two areas. One, the ledger, when the system is very hard to access the information, when people they are not aware of how the spending went, this is an area of challenge. And also, when you have a challenge of viewing the documents, viewing the information, you don't know where they are, there is a chance of corruption out there. Too much power, too much corruption. So now we're going to what has been done. Is it possible to build application? Now we're talking about the hype and the era of the AI, and we see application coming out every day that's bringing something simple like taking notes or making a video in AI. Can we do things in the side of blockchain as well? So what we have done, we are actually worked with governments. Some of this information, confidential. We're not going to share too much details, but we worked with governments around the world, in Middle East in particular, to use blockchain applications to change services or to actually build services. For example, one applications that we have done is to bring a drone platform. We built a drone platform using blockchain for a very good reason, because when you have a drone, devices flying around cities or flying around town, you want to make sure the data is accurate. You want to make sure the location is accurate. The information is accurate as well, where you don't get traffic. You want real time, you want trust, and you want accuracy. So when you're doing that, and we used it for, it's going to be built specifically for the delivery service and disaster response and the environment monitoring. So here is an area for entrepreneurs. So building a platform that actually provide and deliver this service is very important. But the government wanted to make sure this is a very highly sensitive area. So when you are in a city, you don't want, for example, cars walking around and stuff. You don't want the delivery to happen anyway. When disaster happen, also you want to be prepared. And also when there is any environmental issues, you want this data to be fed to the system with a very accuracy. So what we have done in the level of the strategy and the level of study and the level of just building this application from the government side to prepare policymakers is to prepare them to understand how blockchain could help them be aware. So there is applications, there is areas that the government is working on right now to build application in the blockchain. Another area, there is lands and there's some ownership issues that could be cleared by the blockchain. This application we built with a free zone authority in Saudi Arabia, that they are actually wanted to see the lands that owned by the government for free zones. They can attract investors. So investors coming from outside the country, they don't have to go through paperwork process and challenges. So blockchain, it could automate this transaction. It could automate the transaction and also create an ownership without challenges and easy payments also. And of course, at the end, you're using what we hear NFT as a cute, punk, and it actually could be used for something a lot more than you can see in the internet today. This is the general infrastructure, how it was built. So how blockchain could be highlighting like an actual architecture for investor, lender, and citizen using existing systems like Esri database and connect to host that is actually available in the city or platform or the municipality that could actually help. And also the master developer, whoever owned the entire land, could divide it and give it specific information. Then the government have this layer here where the application have multiple authorities. This is one of the challenges. I said earlier, government thinks that they own the data, that government agency, they don't want to share it. You have a multiple source. So when you have a one government agency acting as the big umbrella, putting in the blockchain, everybody can have a piece of it. It doesn't matter what's your information. You can access the information in the proper way from this source, whether it's Esri database or whatever, and then build that into a smart contract, and then you have the blockchain network acting as a distributor of the data. So information are key, data is key. Blockchain isn't just the future technology, is the future of trust in government. Because what we want to see from our government, what we want to see from the data that we share around the world is to be trusted. Because we hear data breach somewhere, security challenge somewhere, applications are not functioning, are not inclusive. So this is what we want to see. As users, we want to see the governments are using blockchain and more. You as entrepreneur, you need to think of it. This is an area where there's a lot of research, a lot of applications that could be built, a lot more than what we understand right now, but the more you dive deep into digital transformation and challenge. So in this is our chance to reimagine government, in a way for the future, not the dinosaur age, not the dinosaur systems that the government owned, but for the future. Digital age, we're talking about, technologies that is now, we give one prompt in AI, you get everything done. But we need more. We need the government to think of more infrastructure built in a way that could help citizens, and it could be future where government is actually hand in hand with citizens. They can build the future of citizen-centric services. With that, I leave you. Thank you very much, and enjoy your conference.
Thank you very much. Do we have any questions for Ahmed? We have. Can you use this? Give me just 1 second to come here.
Hello, my name's Ethel. Thank you very much for your very interesting talk. My question is, in your experience talking to governments, what are their main concerns about adopting and implementing blockchains in public projects?
That's very good questions. Information went out the wrong way about blockchain. So when you go to the office of decision makers, you tell them that I would like to make you a presentation about blockchain. A year or two ago, they would say, no, I don't have time. Because first, he doesn't understand what blockchain could do. Second, the only information he has about, or his staff will tell him, oh, this is the cryptocurrency people. So it's very challenging. So education is a key. So talking in universities, talking with researchers, talking with the decision maker is the very first important things. So we have done a lot of conferences, a lot of talk in the past 4 years about blockchain, and that was, I think, the seed that helped. Okay, now people can understand blockchain and what blockchain could do, but the challenge always there. And what I would say, the more you don't take no personal, and the more you actually stay curious about what is the pain point of government applications and government systems, and you bringing forward, not necessarily a robust and 100% done application, is just a prototype and POC that will help them understand there is an area of collaboration could happen. So coming as an entrepreneur in this frontier that you wanted to make difference when you're talking to decision makers, you just need to stay, I guess, relaxed and educational. And in the beginning, make sure that you are offering education a lot more than you're trying to take dollars from them.
Thank you very much. We have, I see a lot of questions. Okay, great.
Thank you very much for your speech. And I have a question. So you talked about positive aspects of using blockchain for governmental services and so on. What are negative?
That's a good point as well. Negatives is the challenge is, first of all, scalability. That's a big pain that we are facing, how to scale. And second is talking about, especially with government, you need to address a main issue of permission-based blockchain versus public blockchain and data sovereignties. Taking, for example, when you're building a public blockchain, which is the ideal to use blockchain in a public way, building these applications, the main challenge will come that no governments would like, actually no government agency would like their data to go outside their premise, let alone that government data be shared across the board. But at the same time, at the end, they will understand. It's just like the internet era versus the intranet era. One, there is every little department or every little government agency or country, they have their own intranet, and then at the end they give up that for the public. But what happened first is the scalability was available. And you have the ability to scale and assure that this is actually a very secure system. Their data is not going to be risks. So these are the challenges that we are facing. And also, in the beginning, there's some challenge with developers. There's not much developers in this area. So now we hear like most people going to the direction of AI because a lot of people thinking this is the future. But the AI, it will work even better when it's decentralized. There's a lot of talks is going to be about this centralized and decentralized AI is a conversation when you have trained models and things. So just to elaborate in this is that the more you give more information, the more you have a lot of developers aware, the risk will come down, the more people will invest, the scalability issue will go away. But we are facing this right now, how to scale in a system. So when we are doing prototype, when we're doing one agency, when we're doing one application, things look very great. But when you want it to go advanced, things are a little bit challenging, at least at this level.
Super, thank you very much. When I hear negative, I thought that we're speaking about crypto scams, but it's okay. One last question, okay?
Hello, my name is Andrea Castagna. I'm here representing the European Digital Development Alliance, which is a network of people interested in digitalization and digital for development. And I have a question for you, which wants to be a bit provocative. I'm from Belgium and Italy, and I was amazed about this land ownership blockchain system. It's great, but I'm from two countries that are very well known for being let's put it in this way. Our notary system is very well established, is very well connected with people, and there are a lot of notaries that want to work as they are doing now. They don't want to do any change. And essentially, to put the system in place like that will mean that these people will lose their job, because when we have transparent blockchain, those people will essentially either completely change the way they're doing business or lose their job. And my question for you is, I see a lot of potential for the government, for ensuring transparency, but how about the citizens that don't want to have the change? Because as a civil society organization, we have to deal with them. We have to do advocacy, we have to convince them. So how to work with these people that don't want to change?
Well, this is not, I think this is not challenge specific for blockchain. This is challenge for any application that you're trying to bring. Somebody's been working there for 40 years. He doesn't want to change his job. He doesn't want to change. He doesn't want to learn. So the change management, there's a lot of science behind this is being done. But at the same time, from blockchain perspective, if there is a business, if there is a value, and that value first start with reducing cost, bringing more security, and bringing more customers. They buying more land, maybe the price will go up, and people would like to make more money. People will definitely go that route, because as I mentioned here, this actually the main business model for the land registry system was how to attract investors from outside the country. And if I am going to your country, I want to buy a land there, I don't have time to go and sit and spend 2 weeks or 1 month with bureaucracy and going from office to office. So putting a one-stop shop for the targeted customer, and that including all of the, tell the other agency, you stay in your office, you will do whatever you're doing, but now we are building a new business model, and this business model targeting a completely different branch of the society, maybe in the country or in the city or completely out. We want to attract more business to our city. So we are putting this system on so people can go and apply remotely and pay remotely, and they don't have to go, okay, you got your deed, you got your license, now go get the building permit. You get the building permit, now go get the electricity permit. You get the electricity permit. All of this system, you can do it just like now you book your airline ticket. So it's one-stop shop. Everything is done in the background, but you have to have one authority at least in the background of the decision making, saying we are the regulator, we are the policy makers. We will help put the regulation and the steps for these investors to come in, and then we're taking next. So. Sorry to
No, thank you very much. Everything was really, really valuable. A huge round of applause for Ahmed. Thank you. Thank you very much. And now, before we go to the all-around panel, do you have your phones handy in your hands? Okay. We have a QR code. Okay. This is another disruptive technology. Shall we start? Hop. Okay, great. I want you to scan the QR code. In order to get to know each other. Okay, the Greeks are the first. Okay. I was waiting for this big turkey. Super. I see Estonia, Latvia, South Korea, United Kingdom, Egypt, Malaysia, Bulgaria, Brazil, Singapore, Albania, okay, Ukraine. Okay, keep going. And I see one of my favorite countries, the metaverse. People who know me know that this is my country. So, without further ado, and while you are typing, I want to invite the next panel. Isabel, Vera, Hoklai, Rodrigo, Eric. Are you here with me? Yes, come. Tagathorn, you are here? Please take your seats with this super colorful background. So we are going to speak about blockchain and the future of finance, and we are going to include everything from sustainability, inclusions, transparency. All included. Great. Thank you very much for being here. And now that you get comfy, I will pass the mic for each one of you to make a very short introduction about yourself, and then I will ask one question each and one for the audience, okay?
Good morning, günaydın. My name is Isabel Işılıurlu. I'm here representing both the European Women Payments Network and also the company where I'm working as in the advisory position, Julie.com, and I'm really delighted to be here. And yeah, I will keep it very short so we can dive into the topic.
Good morning. I'm Hock Lai from Singapore, co-chairman for the Global FinTech Institute. I'm the founding president for the Singapore FinTech Association in 2016. And then subsequently, I founded the Blockchain Association of Singapore in 2018. So I'll provide a perspective of Singapore on blockchain. Thanks.
Hi, everybody. My name is Eric Pitts. I run a company called 42 Payment. It's a payment consulting company, basically doing payment consulting on a 360-degree level. Currently, mainly engaged in public transportation and EV charging, where we're seeing a huge adoption of open-loop payments. And in general, all things payment concerning cryptocurrency, etc. But I think we'll dive into that a little later.
Hi, everyone. Dimitri, thank you so much for enabling that massage. I think it was the best part of this conference.
We will continue to do it. It's okay.
So I'm Vera. I come from Greece and from Moldova. I'm an independent consultant in compliance. I offer consulting for fintechs, for various blockchain companies regarding compliance strategies, AML, anti-money laundering, fraud, investigating financial crime on chain. And I love blockchain.
Hi everyone, my name is Rodrigo Barbosa Silva. I'm from Brazil. I run a company, it's called Livix FinTech, and I'm very excited to be part of this panel and to share with you what you are seeing in Brazil, that it's a financial revolution based on technology.
Hi, good morning everyone. My name is Chathon Tenthikun. You guys can call me Fongs. I work for a Thai bank, Siam Commercial Bank. We are focused in blockchain and digital asset. What we're doing is we're doing asset tokenization. We are leading in Thailand. We have a few projects in the past and a few coming projects coming in Q4 and Q1 next year. So today I'm going to share it to you.
Thank you very much. And this is why we are DCN Global. You can see that you will hear a global opinion of everyone. We will start with ladies first. So, Isabel, how do you see blockchain transforming global payments in order to enhance efficiency and sustainability?
Oh, you start with me.
Yeah.
Self-work. I would like to pass this to Vera maybe, because she said she loves blockchain, and I have to admit, it's not my my area where I have as much as Vera the expertise. You can direct the fintech questions to me, but blockchain I would like to hear Vera's position.
For Vera, I have a slight specific different version. I like the plot twist though. As regards, given your experience in compliance and all the forensic work that you do, how we can blockchain be leveraged to improve transparency and also addressing regulatory concerns in the area? We can start light in the morning, so start with forensics.
So the inherent immutable nature of blockchain permits this transparency that we are looking into. And as an investigator of financial crime, blockchain has been so significant in reducing fraud, money laundering, financial crime, enhancing compliance processes, and reducing operational cost. So it's a technology, such revolutionary technology, I think that it's truly benefiting finance and in general the finance industry worldwide. And I think that the only source of truth, which is blockchain for all regulatory bodies and also for financial institutions, is the key point. Because the transactions are irreversible, the data that we get on chain is also reversible, so only the fact that we cannot change this data gives and permits this transparency that we're looking into establishing worldwide through the finance industry.
So immutable nature is the number one.
Immutable nature, yes.
Super. Thank you very much. I will go to Hoklai. From your perspective at the Global FinTech Institute, what roles does blockchain have in advancing financial inclusion in Southeast Asia, and also what the challenges that need to be addressed as regards to expand the access?
Just to add on to my day job, I run a FinTech payment company that covers both Web2 and Web3 payments. We do see increasing adoption of blockchain, especially stable coins, for cross-border payments. So definitely from the angle of financial inclusion, remittance will definitely play a very important role, because like with blockchain with stable coins, you are talking about transaction fees in just less than $1, instantaneous, almost instantaneous, and 24/7. Every day you can do the transfer. So definitely I think we are seeing more and more adoption, especially in emerging countries, whereby the payment infrastructure and network might not be as mature. So there is emerging adoption, not just at the individual level, but also at the business-to-business level. And then in Singapore, in particular, we do a lot of experiments, right? So in Singapore, we have a project called Project Orchid, where we experimented with programmable money. We call it purpose-bound money. So with that, for example, when we are giving out government vouchers, we can program the Singapore dollar tokens that can only be spent on specific categories. So we don't want the citizens to use it to buy cigarettes or wine, but they can use it to buy eggs or milk. So that is another thing. But I think the biggest challenge for blockchain will definitely be in the space of consumer education, because there is really lack of awareness, and it's really currently mostly used by the younger folks or those who are more technologically more savvy. And the other challenge is really about the varying regulations around the world in blockchain. Some countries are more advanced. Singapore, we started regulating digital assets since 2020. Some countries are still catching up. So with this uncertainty, it actually deters businesses, merchants to come on board. That will then provide more opportunities for the underbanked and unbanked to access blockchain-based financial services. Thank you.
Thank you very much. Eric, in a decentralized finance ecosystem, what measures do you consider essential in order to ensure integrity of payments, processing without compromising blockchain's core benefits of transparency and autonomy?
So in general, right, I come from the payment world. So payment world means we have a certain, we call it four-party system, which involves a system that was set up by centralized institutions, starting with, let's call it a MasterCard, a Visa, etc., which have members that are acquirers, so card processors, and then we have banks that issue cards, etc. So we're talking about centralized systems through and through. And all of this can be regulated, right? All of this is not transparent because basically a Visa, a MasterCard, so companies that are active on this in the stock market, listed in the stock market, basically make the rules, and then we look at their focus. So coming to transparency, I don't see any transparency there. I see a certain reliance on regulatory factors, and then when you look at decentralized finance and everything that was already basically just said, we have in decentralized finance the issue that there is this transparency we don't have. There is, I would say, no regulation, right? In that sense, right? I mean, you cannot regulate a cold wallet, or Vera, right? Or can you?
Well, right, but I just wanted to add that cryptographic solutions that have been emerging, proof of work, proof of stake, all these cryptographic solutions help to balance privacy and also transparency. So I guess this cryptographic solution,
a saturation of some tool, some option for the masses to use blockchain, cryptocurrency, etc. So to dive into that, or to dip into that, I think that's basically what's missing. Once we get there, so for example, right now you can just enter your whatever credit card into Google Wallet, Apple Wallet, whatever, and just use it, right? So, and the wallet is just an intermediary to your source of funding. So once we get to a point where we can actually add, let's say, an address, right, to your Google Wallet, your Apple Wallet, right? That's the first step, and then of course on the other side is the acceptance, right? So I think that's when we actually are at that point where we then actually have decentralized finance. I don't know if that answers your question, but that's what I want to say.
Yeah, it answers a lot. Yeah, and the first thing that we need to understand is that humans avoid friction. So as we have friction in these technologies and people need to do 1, 2, 3, 4, 5 steps in order to have a wallet or to do a transaction, to obtain a token or whatever, the whole concept of decentralization will have low adoption. As technology evolves, hopefully we're going to see these sci-fi payments that you just think and you pay and you move forward.
And also the zero knowledge proof cryptographic protocols that are also
evolving. It's also a protocol that is really promising. So the next question is about, for Rodrigo, how we incorporating smart contracts as regards emerging markets like Brazil, and if you have any specific examples to share about the use of smart contracts as regards to transparency.
Thank you, Jimit, for your question. The first thing to understand about Brazil is that we have several reforms going on in the last 20 years. So if today we can talk about decentralized finance and you can have new actors like fintechs and other institutions doing payments, financing, it means that 20 years ago the government started to create things like open data, open government. So the openness of the opportunities are the best ways to bring more people into the system, and you can provide specific solutions for specific scenarios when needed. About smart contracts, I'm going to give you 2 examples of my companies doing Livix in the countryside of Brazil. Another thing that Brazil is very well known worldwide is that we established also 20 years ago a national program. It was a conditional cash transfer where the government just pays people in need to buy what they need to survive, mainly food. It was 20 years ago. But the federal government has the 2 biggest banks in Brazil, Banco do Brasil and Caixa Econômica. The 2 biggest commercial banks in Brazil belongs to the government. When it started in the municipal levels and the state levels, states and the municipalities don't have banks. That's a fact. So now, as we have several fintechs in Brazil, maybe hundreds of new technological companies, we, as a company located in countryside, can offer our services to the local government. So we started an action in the countryside of Paraná where this conditional cash transfer from the municipal level, from the city hall, happens using our system. So we enforce a model of smart contract that we guarantee that this money from the local government will go directly to the local stores. And the local store will be paid when we match the transaction with a fiscal receipt. I don't believe that Brazil is going to be a cashless society. We are going to be like a QR code society because we use QR codes in everything. And every receipt of a purchase in Brazil has a QR code centralized by the government. So we can capture this information, the match with the transaction. That's important because all the decentralization in Brazil is possible because there is a central authority centralizing receipts, transactions, and everything. So we can match these transactions. What we are avoiding there? In the federal level, that it's not more like a very specific use of the money. In the last 2 or 3 months, the government identified a problem that people were using the cards to embed companies, gambling. Because it started, the gambling industry started to grow in Brazil in the last year, and it doesn't have today in the municipal level. And we are using the same concept in corporate payments, B2B. When you have corporate travel, you are using resources from your company, you have to justify. Yes, I'm traveling, I had to pay my hotel, I had to pay my restaurant, things like that. And they use the same system to match the transaction with the fiscal receipt that is issued by the government. And everything is automated. And in Brazil, at least, decentralization means that we need to rely less on big institutions and more on fintech companies.
Thank you very much. The human element in all decentralized transactions, in all transactions in general, is always something that we need. One question for France: how is tokenization, because we need to bring also tokenization to the discussion, being applied in investment banking and in other areas in order to drive sustainability, efficiency, and if you see tokenization as a way to reduce financial exclusion?
Sure, yeah, it's a very good question. And let me tell you guys more about like the company I work for, so you guys get a little bit background of the company regulation and go more in depth how the blockchain and finance helping with the inclusion with finance. So I work in TokenX is a subsidiary of Siam Commercial Bank Group in Thailand. In Thailand, with the regulation, TokenX will holding the ICO portal, which is a license for us to issue investment token, or you guys might know as a security token, or if you guys here in the Web3, you might heard of RWA or real world asset. That is the other term. So what we're doing and transform, the investment banking industry, we transform the financial product that you might see to their world, from stock, bond, we put it on chain, tokenize it on blockchain. At TokenX, we have our own blockchain too. It's a public permission chain. It's a layer 1 chain for the bank. So with that, we do everything, from diligence, do the filing to the SEC, Thai SEC, make sure that they have to approve before we can do fundraising. The process can take between 8 to 12 months. So this is a little bit background, of what TokenX and how to make it, for people to access into this, right? So there are many types of, asset class that retail people not able to access into it, from real estate, carbon credit, REX, infrastructure, investing in the music industry, for this type of investment, you need to be, have a lot of capital to invest to this type of project. But what we're doing is we tokenize this type of project into the smaller piece and put it on blockchain, and this can be trackable on it. With that, we also, so I'm gonna use one of the example use case that we did last year. So last year in 2023, TokenX, we issued the first condominium-backed token in Thailand. We select 3 luxury condominium in CBD in downtown Bangkok. Usually, for normal people who want to invest in real estate, you might need 10 million Thai baht or about 300,000 USD to invest one, luxury unit condominium, and you want to rent it out for first 5 years, 7 years, and then you sell it on year 8 or year 9, so you get a capital gain from that real estate, right? So for this, it's really hard for the retail people to access, or to invest to this type of investment. So what we did is we tokenized the portfolio of the real estate in Thailand of 244 units. It's brand new. The concept was 1 token equal to 1 square inch, and 1 square inch is equal around like $6. Now, retail people, retail investor or small investor, they don't need to have like 300,000 USD to invest on this type of project. They just need, $5, $6 to start invest. And for that project, it's a 10 years project. So first 5 years, the investor will get the guaranteed yield between 4 to 5%. First year is 4%, second year is 4.25, 4.5, 4.75, and 5% on 5th year. It's a guaranteed year is paying quarterly, similar to like financial product. And year 6 to year 10, the asset manager will start selling those units out. So from 5%, 10%, so by year 10, all the unit will be sold out. So the investor will get the capital gain from the land price. And we partner with the outsourced, consultants too, so they will do the market survey, what is the price of the real estate on that year, so they cannot sell below the price to protect the investor. So this one of the example, that we did last year. But in the coming, month, in Q4, Q1 next year, we're gonna have many type of product that make retail investor can access into it. From carbon credit, people can start investing carbon credit. People can start investing in REX or renewable energy certificate in it, or even the music or entertainment industry. And that's one part of it. And how can we make non-bank, access to this type of asset more? So in the future, we're planning to use stablecoin in this project. So SCB Bank, we just announced like 3 weeks ago, in the public, so I can talk more on detail. So SCB 10X, the VC arm, we joined with the we are in the sandbox with the Thai SEC regulation. So we just create a Thai stablecoin. This one can be more like B2B between cross-border, which is gonna reduce the cost of payment, the transaction fee, and we're gonna use this to be part of our tokenization process from buying the token or receive the yield with stablecoin.
Thank you very much.
I just wanted to ask you, what about the legal process of ownership as soon as somebody invests in real estate?
Thanks.
What about the legal process?
Legal process? Can you repeat the question?
Yeah, so as soon as somebody wants to invest in real estate and tokenize the asset, what about the legal process of it? Such as ownership, documentation, all this stuff that we know traditionally that you need to have in hand in order to prove your ownership.
Yeah, that's a really question. So what we did for us is an investment token. So it's a financial product. It's not the STO or security token. So the token holder they don't have right of the ownership of the real estate. But what we did is we set up the SPV, for that, and that's SPV gonna have a trustee, asset management, and with the legal process, right? So
I think the question was, is it ownership or is it investment? I think it's an investment.
It's an investment, yeah.
Right. So then there is no legal process, deed or title or anything.
Yeah. So the token, let me explain more. So the token holder doesn't have the rights of that real estate, but what we did is we created contract. It's called RSTA, Revenue Share Transfer Agreement. So any profit, or revenue that making from that real estate will transfer directly to the token holder. Yeah.
So we will continue from you, Isabel.
Oh, both.
Okay, we'll
Thank you.
Yeah. And we want to go back to smart contracts and other use cases that you want to share with us. Mm-hmm. So.
Yeah, exactly. I found it very insightful what you told about Brazil. Although Brazil and India are geographically so far apart from each other, the tendencies of the customers or the end users are adapting and also willing to pay is very similar, actually. Those countries are maybe from the Western European perspective, something that we can call like late adopters, but the speed of the integration and technology and also the adaptation within the people has just been remarkable. And for my company, where I'm also advising in the payment processes, what we are seeing basically. 2-3 years ago, the payment strategies that we were establishing is completely changed in the country. And we're talking about the biggest country in the world. It makes, if I'm not mistaken in my math, it's the 1/6 of the world. So that means it's a remarkable step if you see even one bit of acceptance in this country. And Brazil is also, I think, one of the other remarkable countries where we can see the adaptation and also the establishment of technologies such as blockchain. Where I'm also seeing another perspective in blockchain and smart contracts especially, found the last question of the earlier session quite interesting. Again, I think that was you from the Belgian and Italian perspective, right? So I'm from France. It's very similar, notary business and everything. I see and I really understand your point. But we have to also think like in the big picture. So we have a centralized system and in which we trust. But what can we say in countries where the trust in centralized systems is lacking, and even if it's not existing? If I'm talking about India, this is a country with 100 different languages, different regions, everybody acts differently. There's a federal bank that says, we want this now, and everything's blocked. For 2 months, you cannot do anything because they're not allowed to sign any contracts. And you send in documents, it maybe gets reviewed, maybe not. So it can get reviewed very easily. It can get stuck for months. You have to know people. And international documents that you're providing from Germany or from somewhere else, it needs an interpretation. So they don't really understand what we are coming from, where we're coming from. The numbers, they are lacking. We don't have the country-specific registration numbers. You cannot have investors from somewhere. It all needs to be checked, and it takes extremely long, and that makes investments, that makes technology, innovation in the country, where it's much needed, very, very difficult. And I think blockchain is going to, with its smart contracts technology and part of it, it's going to make such a revolutionary part where centralized systems is not even given. And I think this is going to be such a revolutionary, great way of also the world's adaptation. Once we see good examples, such as countries where we regarded back in 90s not really being tech savvy and not so forward, actually stepping over you and saying, look, we are so much better than you now. So France, where are you? We adopted everything. We're so much efficient than you. You're still stuck in 2 months, 3 months of notary businesses. Then it's going to be actually a very remarkable example for the whole world. And this is going to be maybe, we were having a debate yesterday during the ferry. We were having a debate whether the blockchain is going to be adapted from up-down or down-up. So is it going to be the clients, the businesses demanding, we want this because it has an advantage for us? Or is it going to be a government or any centralized system saying, this needs to be adapted now? Everybody pretty much thinks...
Bottom up or top to bottom.
Exactly.
Okay.
Pretty much, so many people think it's going to be like from up somewhere saying like, this is it now. But I think differently. I think the adaptation will happen slowly by the customers having a positive regard towards it and seeing the advantages, businesses demanding it. And I think it's not going to be regulatory because we have to think differently also here in the sense of regulatory, but it's going to be really something that's so needed, such as internet. You know, internet was the same, so we needed internet because it was so efficient, and it's going to be, I think, demanded and then established.
Do you want to add something? Yes, of course.
Sorry.
One thing, it's good to remember that Brazil and India have similarities in terms of technology adoption. And your talk makes me wonder, this idea of sometimes we distrust governments and we are afraid that the government will misuse our information and everything. But I'm going to be optimistic about the role of the government, at least in the Brazilian perspective, because the Brazilian Central Bank, that is a very central authority in your country, they created a public infrastructure for it's the PIX system. PIX, open finances. Now we are going to roll out the DREX, that will be the Brazilian CBDC, central banking digital currency. But the idea there is that I think it's the very best concept of a public servant. where they are creating the public infrastructure centralized by an institution, because we as a society, at least in Brazil, we function as institutions. We build institutions and we reinforce institutions, but the infrastructure is public in a sense that companies, students, academia, and the other scientists can participate of this public institution.
Super. Do you want to add something? Because I want to go to a totally another topic.
Quickly.
Okay.
I think this is what we need. We need incentives from the regulatory bodies and information on blockchain. We need more awareness on blockchain. And if we have this cooperation between regulatory bodies where we get the incentive about blockchain, this is where the public will be affected more positively. But we need to work on that a lot.
Yes, for sure.
I 100% agree on that. I think the incentives, and also it's going to affect so much the adaptation, right? Because in countries where we trust in the central bank so much, you cannot really come from somewhere else and say, this is now the way we do it. No, the central bank has to back it up. So it needs to be given. Otherwise, the trust will be lacking, and you will have so many businesses, they're going to be late adapters or maybe not investing in it, and it's going to be such a lengthy process otherwise.
Sorry, guys, I have a totally different opinion because sorry, but because if you're talking about
this is why we're a panel.
Exactly.
So
exactly. No, it's perfect. Yeah, it's perfect. I love it. No. So we're hearing regulatory bodies, we're hearing central bank, etc. I think that's exactly what we don't want, right? If we're going the blockchain. No, I know you didn't, but it's just what I heard, right? So that's just a word. So that's not what blockchain and what it, so freedom of transaction, right? Freedom, of to be free of free from persecution, etc. So that's what we want. So we don't need I believe an incentive from a regulatory body to use a blockchain, because in the end the blockchain is just another database. Right. What makes it special is that everything that you said, right? It's immutable, right? It's decentralized, and that again excludes anything regulatory, anything central, right?
Right, but I was speaking also on the environmental factor, which is such a huge misconception that blockchain.
We are going to speak about misconception in the next part.
So this is why I mentioned regulatory bodies, because if we don't get the incentives from the regulatory bodies that blockchain is actually not harming the environment, then how can we get mass adoption and industry-wide adoption of decentralization? We need a cooperation, but I think that it starts first from the bottom.
Maybe I join into the discourse. I think in terms of centralization and decentralization, we need not think in terms of binary, one versus another. Both can actually coexist. From Singapore's experience, we thought very hard about implementing a retail CBDC, but our current real-time payment system, the domestic payment system, is already super efficient, super low cost. There's no need for a retail CBDC. But on the other hand, if you talk about smart contracts, right, programmable money, there could be a lot of advantages. For example, just now I mentioned about the government vouchers. A smart contract version of a government voucher will be very hard to create fraudulent copies of it. That's the first thing. The second thing is really about being programmable, right? And on the blockchain, it has real-time settlement. That incentivizes merchants to accept this form of payments, because the traditional paper-based voucher, they have to collect the voucher, then they have to bring to somewhere to claim from the government, and the whole process when they collect the cash could be a week later. I mean, for a lot of merchants, right, daily cash flow is very important. So sometimes we have to think about, when we go to blockchain, what are the key strengths of blockchain and how they can be more useful in certain use cases. So I think we have to broaden our mind and not think in terms of binary. Thanks.
Super. So we have a room full of young people. people that they want to understand, they want to learn. Many of them, they try to experiment with these technologies. Many of them, they understand technologies because they are digital natives, they are Gen Z, so they born while blockchain exists, Bitcoin exists, all the cryptocurrencies. So I want one misconception of each one of you. What do you think the biggest misconceptions around blockchain, around DeFi, around digital payments, the biggest misconceptions in order for these young people to learn and understand? So, who wants to start? Okay.
Just because you got me rolling anyway. So, so it's what I just said. I think one big misconception is that blockchain will take care of every and any problem. With all the nice descriptions and wording that we just discussed in the last half hour, it's just another database, right? First and foremost, that's what it is. And for the past couple of years, blockchain has been looking, I think, for a problem it wants to solve, right? So, coming back to you, Vera, I think I actually also believe it has to come from the bottom up, right? So it's you and me and everybody here, and you guys that have to start using it, right? To yeah, exactly. And I'm Gen X, so I still know Pulse style, So yeah, you can do that in a second. So yeah. And so, where was I? So it has to come from the bottom up. It has to come from us, from you guys, to start using it, right? And then you can either exchange cryptocurrency to do peer-to-peer payments or whatever. You can start smart contracts between each other. Basically, a smart contract is something called IFTTT, right? So if this, then that. So it's very simple, right? It's not rocket science. It's not and all the nice words that we have for it, but it's just another database that has certain processes and certain functionalities that are very, let's say, simple and very easily usable. And I think that's to me one of the big misconceptions is that it's something so special. It's something that will revolutionize the world. No, it won't. It's just another way of doing things. Thank you. Exactly. That's it. Yeah. So. But
more safely, etc.
As Yusuf said, a general purpose technology that we need to put it in our lives, like electricity and the internet. So Vera?
Yeah, I'll focus on financial crime because this is my background. So the biggest misconception is that with crypto, in particular, blockchain, criminals are evolving. Of course, the sophistication of financial crime is never stopping, and criminals trying to find more sophisticated ways of, hiding their source of funds and doing illegal activity on chain. However, it's not true. Blockchain forensic software has been evolving a lot, and of course, it needs still a lot of. First of all, we need a lot of trainers that will be able also to educate the governmental bodies on blockchain forensic investigation. So this will help actually a lot also the regulatory bodies to understand how criminals are interacting on chain, to understand all these obfuscation techniques. Just because, again, as I previously said, the immutable nature of blockchain, all transactions are on chain, the data can never be changed, it remains immutable. This helps actually to track the criminals. And this is one of the biggest misconceptions also of blockchain, that it enhances financial crime activity and money laundering. I'd say, from my perspective and through my own experience. But there's so many other, which I will give the chance for others to.
Okay, yeah, I will do the quick answer for this one. So I'm agreeing, that blockchain doesn't solve, every industry, People might think that, blockchain solve everything, solve every industry. But where we live, in this world, we still have the centralized government, different like, type of party that's involved, that they might not want to share the information with the other party, for example, like supply chain, for the supplier and the buyer, sometimes they don't want to know, like, the middleman doesn't want these two parties to know each other. So there's a lot of challenging, to apply blockchain in today's world. But yeah, that's what we do. We try to figure it out. So yeah, that's my quick answer.
Yeah, I agree with you all, and especially saying that you need to start using that, implementing your business, in your ideas. And talking with students here, you have the opportunity to start a business, to create a startup, to put your own ideas, and even receive some money for these investments, and you can create a career on the private sector, on the government, third sector, if you start to understand this new kind of technologies. I think we are seeing again a discourse that it's a historical promise from the computer science. In the 1960s, we have the cybernetics saying that they are going to release the humankind from the hard work, and we continue to hard working in the years following. In the 80s and 90s, we had the internet protocol saying that everything will be decentralized, everyone will have your own opinions and things like that. But what happened is that today we have 3 or 4 big international companies that dominate the internet. Some governments are dominating the internet. And what I talked to you that you are studying, you are trying to think what you're going to do in the next 50 years, 60 years, is that you start a business using blockchain and new technology. And another thing, I'm a computer scientist. I really believe that everyone should learn how to program something like Python, R, and things like that. Always acceptable, more acceptable than 10 years ago, and it's your time to shine, people.
Yeah, I would like to add something to that as well. I don't know if we can categorize it as a misconception or anything, but one thing is for sure about blockchain, like it was always the case for any other technologies, also internet-based technologies in the last 20, 30 years, is the accessibility. And I think you computer engineers, you can write a thesis about it. We experts, we can have debates for hours about it. But if we're talking about general users, they don't really know what is it, how to access it, how to use it. So they hear something there and also money laundering. So one of my passions, so anti-money laundering part of it, of course. The money laundering comes always in the sentences together with blockchain and something encrypted and so on. I think the general understanding from the public, it's something I don't understand and I don't know how to use, I better don't touch it. So I think this needs to be broken. I think for so many people, blockchain, crypto, everything sounds still like flying cars. So it's something in the future, we will maybe adapt it if it comes. But it will never be a one-day adaptation, right? So we won't be waking up to a morning where we will have the flying cars. Like, it's going to be like that for technologies such as like blockchain as well. It's never going to be tomorrow. Forward, we will be using this technology. I think the understanding needs to be established, the education needs to happen, and people need to just try and see, like we did in the 90s, going into web, starting browsing, and it needs to be an adaptation like this, hopefully not as slow adaptation as it was before for other technologies, but this needs to happen like this. Emily.
We hope that with this conference we are encouraging the younger generations here that is still not, let's say, in society yet, yes, that they would educate themselves more on blockchain, because blockchain is just another way of doing money. Exactly. Like in the 80s, they didn't know what internet was, and it was super something elusive, something far, I don't get it, it's not going to happen. the same thing with blockchain. Blockchain is just going to take lots of different directions, and I think it will help decentralization, actually.
Okay, I think the largest misconception is that people equate cryptocurrencies to blockchain. Blockchain is more than cryptocurrencies, and as I shared earlier, it's already being used in real life for cross-border payments, whether is it B2B, C2C, or G2C. And the other use case is that in Singapore, all the schools under the Ministry of Education, all the certificates are issued in the blockchain system. In fact, it's on the Ethereum blockchain. And in Singapore, we also have this thing called trade trust, which we actually put trade documents like bills of lading on the blockchain so that can reduce duplicate financing risk, and it makes it easy for banks and customs to quickly process all these documents. So all these are real-life applications for blockchain. So very importantly, when you are thinking about blockchain, you have to think about what are the strengths for blockchain. For example, atomic settlement, traceability, immutability. Based on this kind of advantages, then you craft the use case suitable for it. It is definitely not a solution suitable for all problems. Thanks.
Thank you very much. Two comments about the concept of adoption. The adoption of all these major technologies. Imagine that television took 50 years in order to reach 100 million users. ChatGPT took 3 months. And Pokemon Go 6 months. So the adoption and the pace is really fast right now, and we tend to misunderstood how fast exponential technologies are going. For example, if you see the transformation from the combustion engine or the steam engine to actual electricity, to go to the information era, and now to the AI era, goes from 60 years to 40 years to 10 years, and now we see a huge change every 3 years. So blockchain, because it's similar to all these general purpose technologies, will have probably something like an exponential curve. And of course I created a poll, blockchain mass adoption from top-down approach led by governments or bottom-up driven by the people. I see that is struggling to 50-50, so we have a divided audience. I thought that it will be a bottom-up winning, but as you can see, it's top-down approach that is winning right now. So people in the audience think that we need from the governments to start implementing solutions, but yeah, for sure.
So it's always about the people.
So we have 8 minutes. Eric,
I
yes.
think just a comment on that. Just a comment on that. I mean, I get it, right? So the government and what we see it, sometimes is security, right? So so the government to me is any official dealings that I have, or if I have like money in the bank, let's just call the bank government as well. So I go to my savings bank, I have my card, I have my account, I know it's safe, it's insured, my money's all good. So I do get that, of course, that you would want that entity, the government, to then, of course, provide something new, like whatever, new technology, blockchain, something. I get it. But that's not how it works, and exactly what you said, right? And also what Vera was saying. What we have to see is, I think the blockchain environment unfolds its full potential if it's clearly and honestly decentralized, right? So basically, I think, Franz, what you were saying about your investment, real estate investment, it's not a decentralized blockchain, right? It's a centralized blockchain that you're using, right? So it's another database, right? That's controlled somewhere, right? Centralized, control. So that's what it is, and that can only come, right, from a decentralized space, and that's not government, right? That's not.
let me ask you something. Yes, you. Who do you think would want privacy? Who do you think would be interested in preserving their identity and securing their privacy? The government, for the people, or the individuals, us?
Or the mafia.
It's us. We are looking to preserve our privacy because this is the whole point of decentralization. We want to keep our integrity. We want to be as decentralized as possible, I'll say. Then, of course, if this emerging technology will win, then the government will have no choice than to probably adapt. But we will see how that goes.
Super. I want a huge round of applause for our panel. And I will open the floor because I see a lot of hands and heads nodding.
Hi there. You raised an excellent point, Vera, about identity and privacy. I think if people want to vote, they want the freedom to be able to vote. And that requires some level of privacy because you don't want someone judging you for how you vote, right?
Serving so many sectors.
Yes, but that's just one example of where stakeholders in anything should be allowed to vote freely. And I'm Canadian and I'm very grateful for certain things, but I'm a metaverse person, actually, yeah.
Okay, a lot of questions, so little time.
Hi there, thank you very much for the panel and for the discussion. I just wanted to get back to the who should actually drive, government or people. And this is a tricky question because there are many people and they are all different. And as practice shows, everyone is wanting a freedom and independence. But the majority can't function without leadership. So which means that some kind of leadership should be present. And unfortunately, there are no higher leadership than government at the moment within the country, let's say. But of course, the question is: does government can actually drive blockchain in the necessary direction because of its own interest, which is spoiled by whom? By people. So this is a kind of cycle where people cannot drive themselves because they're too diverse, and government cannot drive some different ideas because it's influenced by diverse kind of people, because some people more vocal than others. And my question would be, do you see any other party which can complement government or replace it?
I think this is, again, where decentralization comes in. I think that we are living revolutionary times when power comes back to people. This is my own stance, my personal stance. And so, yes, government should serve the people, but how often that comes and how successful is that? And it has been proven throughout different jurisdictions that governments operate differently with various values. So decentralization exactly serves that. Power back to the individual, power back to the people, not an external body deciding for them. I think this is the biggest contribution that blockchain can have. And I hope I answered your question.
Actually, government is people. So basically, people governing people. So we are coming back to driven by people because government is people.
I agree. Government, we are the government sometimes.
Yeah, so we are governing ourselves.
We are talking here about societal values, and I think that's why DCN stands for. It's like we need to reinforce democracy. We need to reinforce free press. We need to reinforce institutions. Because if I'm alone, of course, I have freedom. I can choose myself what I'm going to do with my life. But if we want to move on as a society, we need to do it with others. And I think NGOs are important, civil society, academia, and science in general. And also business are important if they are trying to create a new society using technology. And technology's main aspect here is to provide this openness, as I said, in Brazil, open data, open finances. That's the main role of technology today. But society and people will have to solve the societal's and people's problems. Thank you.
Yeah. Yeah, thank you for the input. I'm agree with that, and I think it has to be from the both sides, from the people, from us like us, and the government. For what I'm doing, I work with a lot of government too. So what we do is we have to educate them. Go, we prepare some, a decks. Go to them, have a meeting with them, educate them what is blockchain, what is tokenization, and we work with high SEC or different type of government in Thailand. We have to,
Okay.
Yeah.
So before the mass exodus, disrupts the the entire thing, I just have a few comments, if I can, really quickly. The first thing is decentralization is a process, not a point in time. So everything starts off centralized because not everybody in the world joins any project. It becomes decentralized over time, and that is actually, it has to be designed into the project. And so basically you have to look at a project and say, is decentralization programmed into this originally or not? The difference between led by governments versus driven by the people is essentially, are you ordered by fiat to take part in this blockchain project, or is it something that you willingly enter into because everyone else is? This is not the same thing as it's because the people. It's, are you being forced into it or driven to it, or is everyone saying, I want to enter into this? These are two separate things. One of the biggest problems that we have with blockchain is that not everything is on chain, particularly the projects that began between 2017 and 2020. The biggest problem that we had is that it was like, instead of a two-sided project where we had transactions, where it was supposed to be visible transactions but hidden parties, what we had is transactions that were visible on, say, the retail investor side, but on the founder side and on the project side, these were all off-chain. So it's not as transparent as you would think, and this is where we get this idea where criminal activity actually was rife at that time and has been, because we don't have this equality on both sides of transactions, because so many of these were what we call black box transactions, where a lot of the transactions, and I'm talking about things like Celsius and others, most of those transactions were taking place off-chain. We didn't see what was happening. So when you have transactions that are off-chain, you have no idea what's happening. You know what you're doing, but you have no idea what's happening on the other side of the transactions. And then the last part that I wanted to say is, I lost my train of thought on that one, but there was a flying cars comment, and I just wanted to say that China actually approved its licenses for the first flying taxis. So we did wake up this morning with flying taxis. So, you know, we did wake up with flying cars. I remember the 3 use cases that we really have for blockchain. There are 3 main use cases for blockchain, and that is identity, finance, and ownership. Every use case falls into those 3 categories. Everything else is basically just speculation. So when you're looking at blockchain, it's basically one of those 3 things. Everything else is essentially just, you know, tokenize the world, which is never going to happen. So thank you.
Thank you very much. Because we need to go to a break, and I see a lot of hands. Our panelists will be there around the coffee break. Corner them, don't leave them to drink coffee, make questions, introduce to each other, and see you in 30 minutes. A huge round of applause, and see you in 30 minutes.
Yes, yes, you have the clicker or?
I have.
Okay.
Thank you very much for you coming here. I'm really excited to be here. We are going to, our workshop will be leveraging Bitcoin and decentralized values. Great. How is it called?
This one, yeah.
Okay, a few things about myself. My name is George Egas. I am from Greece. My academic background is in economics and finance. I have a bachelor and a master degree. And I currently work in a big multinational FMCG company in sales as an area manager. My journey in cryptocurrencies started in 2017 when I first started the first Greek YouTube channel with crypto-only content, updates, tutorials, and everything for the Greek-speaking people in order to be more familiar with the concept. Since then, I have been a part of many crypto communities, both in Greece and all around the world, and I have taken part in several projects. So, enough about me. Let's get to know each other, and I hope if you want to interact, it's a workshop, it's not a keynote, so feel free to ask questions and be part of the whole process. I usually ask who has any crypto or Bitcoin, but since it's a FinTech forum, I will start with a different question. Is there anyone who haven't in their lifetime used any cryptocurrencies or Bitcoin? Never ever? Few, okay. So, for those who have used and hold cryptocurrencies, who of you has crypto in a hardware wallet? Keeps the crypto hardware wallet. Hardware. Really? Few again. Okay, now we are still getting to know each other. So, all right. So here we can see 4 pictures. We'll start from the bottom up. Raise your hands if you know 1 out of 4. Who knows at least one picture out of 4? At least one. Who knows 2 out of 4? 3 out of 4. And 4 out of 4? Really, no one? All right, we're gonna fix that. So, who knows one with us? What is it? So, can I have a second mic? Is it working? Raise your hand. Who knows 1 out of 4? Here? You wanna? Okay. Tell us which picture do you know and what is displaying?
Okay, hello, I'm Shaw from Thailand. I know the first picture, the big stone, you can see like the first one. So basically, if I'm not wrong, it's like the first kind of currency in human history. Like it's like a very big stone, and that actually if I'm not mistaken, the function is similar to Bitcoin because it's so big that it hardly moves. So whenever you want to use in the village, you just keep it in someone's house, and everyone in the village know that okay, this house had this currency, has this value. That's what I knew. Yeah.
Well, close enough. Okay. The first one is rice stones, or else yap money. It's a manufacturer, a very big round stone found in the Micronesian islands. It's called yap money. We can say it's the first public ledger, the first public blockchain that the ownership of the stone was verbally transmitted from one to another. So that's picture number one. Someone else to help with another picture. Yeah, there. Can you pass the mic there? The second one? Here, here, here.
Oh, here. Is this Bruce Jenner? That was Caitlyn.
This one?
Yeah, is this Bruce?
No.
No?
You know who is it? No. And someone else? No? You are speaking about this handsome dude here, right? No? Okay, I'll help you a bit. His name is Hal Finney. He's an American software developer.
Yeah, I know Hal Finney.
Yeah, so he is one of the core developers of Bitcoin. He was the second one to mine Bitcoin after Satoshi Nakamoto. He was the first one to accept the first transactions directly from Satoshi himself. So, we have two more. Anyone? Give the mic there. The second mic, please. Pass the second mic. Teamwork, please. Teamwork. Pass the mic. Great. Thank you. What's your name?
My name is Shashwat.
Yep.
The top right, that's an elliptic curve.
Exactly. And what are where is applicable to?
Cryptographic hash functions.
Yes, exactly. That's elliptic curve. It's one of the main approach of public key cryptography, also digital signatures, and other cool stuff that we use in crypto. And the last one, well, I thought that was the easier one. You? Okay.
Why not? So, Jana from Slovakia, and it's newspaper or some news site.
Well, of course, a newspaper. You state the obvious.
Yeah,
Pass the mic back, please. It has a meaning, this newspaper, the front page. Help? Teamwork, please. Yes, great.
Hi, I'm Mark. So this is the message of Satoshi Nakamoto on the first Bitcoin blockchain, chancellor on the brick of second. I cannot read.
Thank you, thank you. This is the front page of the Times newspaper, published on January 3rd of 2009. This is where Bitcoin network starts working, and this message was encrypted in the first block and stayed in the immutable blockchain forever and ever. And you can uncrypt it and read it for yourself. The message was counselor on brick of the second bailouts for banks. That was after the collapse of the Lehman Brothers, but we'll get to that in a few minutes. So, what are we gonna do here? The title of the workshop is Leveraging Bitcoin and Decentralized Values. In order to leverage something, you have to understand it first. So in order to understand crypto, you have to understand Bitcoin. In order to understand Bitcoin, you have to understand money. In order to understand money, you have to see how it works, what is money. So let's start with one more question. What is money? Simple one. Speak loud. What? Piece of paper. Credit. Credit.
I'll just get your hand off it, all right? Everyone's trying to predict the next alt rock. First it was stone, then bronze, then iron, now gold. What can I even do with this shiny shit? Make fucking jewelry out of it or something?
Yes! Yes, you can do that. Great idea, because it's malleable. And, best part of all, there's fuck all of it. It's a finite resource.
Mate, I'll tell you what a finite resource is. My fucking patience, all right? Now, piss off!
You know what? Stuff it. I'm taking it back. It's like talking to my dad.
Yeah. Why don't you go discover avocado and smash it on toast, you dickhead?
Yeah, maybe I will.
Sorry, mate.
I'll have a dodo head, thanks.
Half a chicken. Piss on me, not you two.
Oh, no. This is way better than gold. It's silver, or as I like to call it, light gold cash. It's faster to mine. It's...
Got to be the last one, surely. Ratskins, dodo heads, very tepid lemonade. Get it here. Desert warm.
So, that is how we evolve from a currency to another currency. It's not easy, right? We are very attached to our ways that we are doing things, and it's really difficult to get used to new things. But that doesn't mean that they won't happen. They will. They do, and they are doing it right now. So, back to our first question, to what is money? Money is a concept. Money is an idea. Money is time. Money, you cannot put something, a commodity, to money and say that is money. The closest definition, which I found, and I modified it to meet my criteria, is this. Money is a language that we use to communicate value with each other in distance and in the future. So, money has some basic functions. What's that? That's a medium of exchange, store of value, and unit of account. We need to have money to exchange each other for trade. We need for store of value for future use, and a unit of account in order to measure things, to measure their values. So that's the basic functions of money. No currency is perfect in all these dimensions. So we make some trade-offs while using a currency. We need something maybe it's good as a medium of exchange, but lack as a store of value, and so on. So that was the functions of money, and that's the specification of money. So what do we need for a currency to have so it serves as a medium of exchange? It needs to be acceptable. It needs to be divisible, fungible, portable, and verifiable. For a unit of account, we need stability. And for store of value, we need durability. Durability as in terms of the current expectation of a stable or predictionary knowable future demand and supply for the asset. So, do you have any examples for currencies that used in the past that serve one function and not the other? Can someone help? Let's say gold. Let's go back. Was it good as a medium of exchange? Anyone? Yeah, yeah, so gold was a perfect, let's say, currency as a store of value, but they lack the medium of exchange because it's not divisible enough. You cannot buy an egg at a house. Maybe it was good for a unit of account. What about, let's say, the British pound? It may be very good as medium of exchange because everybody by that time was accepting it. Maybe a unit of account by that time because everything could be measured in pounds. But the store of value, it depends about the time. If you want to inherit this amount of value that is described in pounds or dollars or euros or any other fiat currencies, you want to pass it on to your grandchildren, you may have suffered some depreciation. So the next mindset that you have to evolve, besides to separate money and currency, is to understand the purchasing power of your money. This is what we're trying to preserve. Anyway, we'll go a little fast forward, so we get it that the money evolves and it evolves with the community. So, on 2009, Bitcoin was created. But it didn't come out of the blue. Bitcoin is not an invention that a pseudonymous guy or girl or a group of people invented. It is a combination of pre-existing technologies that combined and gave us the first successful attempt to send money through internet without the need of an intermediary. And now we're starting to understand a little bit more about decentralization and the meaning of it and the essence of it, because we heard this word, I don't know, maybe 100 times and it's still 1 o'clock. But do we get it? So, what is Bitcoin? Bitcoin is 3 things. First, we have Bitcoin, the protocol. It's an open source software. It's code that anyone can access it, anyone can play with it, can copy and paste it, can alter it, and it's there. So then we have Bitcoin, the network. Anyone who wants to join the network, they download and run the software, the protocol, and then they are part of Bitcoin's network. And then we have Bitcoin with lowercase b, which is the currency of the network. It is what the participants of the network use to exchange value with each other. That's what 99.9% of the people of the world knows when they first hear about Bitcoin. But hear me out, this is the tip of the mountain regarding to what is exactly Bitcoin. So now that we established the what, we're gonna see how it is created. The protocol has some rules that they are not modifiable. They are predetermined, known, and everyone who wants to build a network has to play with the rules. So it is created from a function that is called mining. What that function does is that it verifies the transactions within the Bitcoin network and keeps the network running, keeps all the transactions in a public ledger. So this, for that, those who join mining and does that work, they are rewarded from the protocol with newly minted coins. That's how is the architect of Bitcoin, and that's how it's working. So Bitcoin's monetary supply is predetermined and known, and nobody can do anything about it. When it first started, there were 50 Bitcoin mined per block. Each block is mined every 10 times, every 10 minutes. Within a block, we have transactions of the participants. And after 4 years, the production of the Bitcoin is cut in half until it reaches the maximum capacity, which is 21 millions, and this will happen somewhere in 2140. In 2036, 39, there will be 99 of the circulation supply mined by that time, so there will be a very small percentage of Bitcoin to be mined. So, this is the how. Now, why is so valuable? Someone asked why it costs so much. I think you did. So, to understanding Bitcoin and open blockchains, we have to understand the 5 pillars, which is open, public, neutral, borderless, and censorship resistant. What do I mean by that? Bitcoin is open. Anyone can join and leave the network at will without asking any permission. So if you're a developer, if you're a miner, if you just want to use it, you can just download the protocol, run the software in your smartphone or a smart device, and then you're part of it. You don't have to ask permission from someone. It's public. everything are stored in Bitcoin's blockchain. This is a public ledger where everything and everything is transparent. Everyone can verify anything. There is no hidden records. There is no something behind the curtains. Everything is exposed and immutable, and nobody can do anything about it. So, if you want to run a scam and you want to use Bitcoin with it, I would suggest you think twice before using it. It's neutral. Bitcoin doesn't care if you're rich or poor. Bitcoin doesn't care if you are man or woman or old or young, on where are you from, and what is your financial status, what is your religion, and what is your political beliefs. Bitcoin doesn't even care if you're a human. You can be an AI agent that knows the rules and plays by the rules and know how to transact, and for that you're valid. You can transact, you can participate. It's neutrality. It's borderless. You can send to anyone, from anywhere to anywhere, whatever you want. And it cannot be sanctioned from a border. It's money that runs on the internet. So as long as the person you want to send Bitcoins to has a smart device and internet connection, he can accept it. No matter if you have some limitations of your country, or maybe your country doesn't allow any other currencies to transact with. Maybe you are outside of the European Union, or maybe, I don't know, you have limits within your borders. Doesn't see any borders. And is the best, one of the best, and the last one is censorship resistant. No one can freeze your account or close your account or sanction your account at will, or regarding some, let's say, your political beliefs or your or where are you from. And we've seen this happening 2 years ago. Russia, in 2022, was sanctioned from US. Actually, that's the first time in human history that this is happening. So central Russia's bank account was frozen, the government's account was frozen, and all the citizens were sanctioned. So Russia was banned from SWIFT. SWIFT is a worldwide protocol for international money settlements. So imagine you are a Russian student here in Istanbul, and you get sanctioned. And you have all the money of the world, but you cannot spend it. What are you going to do? Imagine, from the other hand, that you are Ukrainian, and one of the biggest military forces of the world is invading your country, and you just want to save your women and children, and you want to send them abroad to your relatives in Australia. But the banks are closed because you have war, and the war has to be funded. What did you do? What are you doing? Do you have an alternative? Again, you have all the money in the world. You're a rich guy. You have land. You have securities. You have equities. But you cannot access them. It's funny enough, and I use this example on purpose because by that time, both Russians and Ukrainians, they're using Bitcoin in order to overcome a problem that they were facing with their governments and banks. And I use this example because we have two nations, they're going to kill each other. Obviously, they cannot trust each other, but both of them trusted the platform, the protocol, trusted Bitcoin to transact. Yeah. Is there a mic somewhere on the audience? Should be. No?
There's a mic here.
Oh, all right. Okay. Thank you. Thank you.
I want to ask that, is there a physically Bitcoin, and how we can understand this is real Bitcoin? How we can trust and buy? Thank you.
Let me rephrase the question. Is there a physical Bitcoin, you ask? And how you can verify it? All right, nice question. So this is purely digital. And thank you for this question, and I will make a parenthesis and tell you that all the words we use for this presentation, and I believe all the words we are using in these conferences, that we are trying to describe what happens in the digital world, is an abstract. So take it with a grain of salt, because our mind thinks of a certain thing when we send some certain words in the physical world that they don't apply in the digital world. To ask your questions, Bitcoin is purely physical, it's purely digital, you cannot touch it, and it's very easy verifiable. You just have to download it and buy it from a, we'll come to that afterwards, how to own a Bitcoin. If I can send you Bitcoin through Bitcoin blockchain network and it arrives to you, that's it. You don't need any other verification. You have your wallet, you have your keys, that's how it works. No need to verify anything. There is no fake Bitcoin. This is one of the key characteristics that also applies in the digital world. Because, and that was a great pass, I will elaborate a little more, because since this was a question, I think it's very important for me to clarify a little bit more on that topic. Digital currencies like digital, we have, like here on our pockets, a credit card or an app on the phone or a smartwatch that we can pay with Revolut, or our bank with euro and fiat and dollars. And that is digital money. So we can transact in the, across borders and in the digital world. But for that, the biggest problem in digital world to send money was exactly what you described. How can you verify that this digital dollar is not spent twice? Because we have, you can fake euro and dollar, and you can fake a little bit gold with fake gold bars, but if you know how to spot it, you will. And there are special machines to spot the fake paper. But in the digital world, if you just copy and paste, the paste is the exact copy of the original. And you cannot tell what is the original. This is the one and biggest problem that Bitcoin solved. So in order to prevent that from happening right now, what we use, authority. There is a central bank or a government or a corporation who is in charge of your account, for you not to spend twice the dollars you have on your account. So, for a transaction to happen, you want to send money in the US. So, I get your dollars here, I'm the corporation, the bank, I verify that you own the account, you have the dollars in your bank, I withdraw the dollars, and I'm sending them to the bank of your cousin in US. So the bank verifies that the amount is set, because he doesn't, the bank doesn't trust you, but they trust your bank. So the money goes to that bank and then goes directly to your cousin. So we have at least two intermediaries within this procedure. So with the process called mining, we eliminate that problem. I'm close the parenthesis. If you want to elaborate, come find me in the coffee break. I will explain more about how this cannot happen. So where was I? I don't remember. Let's see. We were at the point that two countries, the citizens of the two countries that are still at war and they don't trust each other, they trust the platform, they trust the network, they trust Bitcoin for their transactions in order to overcome one of their main problems by that period. So Bitcoin, we can say, among other things, it is a decentralized platform of trust, which you don't need to trust the other party. You just trust the system. Any questions up until now? Let me check the time. All right, wrap it up. Okay, owning. You heard about this technology. How do you get your hands on this super cool magic internet money? 3 ways. You can mine it, but this door is a little closed because it's not efficiency to mine right now. For you to mine, you need to spend a lot of money on hardware equipment and spend a lot of money in electricity in order to verify the transaction in the network, keep the public ledger and keep the network running. And for those services you provide to the network, you will get rewarded with freshly minted bitcoins. That's opportunity number 1. The easiest and most common thing is to buy from an exchange. Right now, there are a lot of exchanges, there are a lot of possibilities for you, like Coinbase, Binance, Kraken, Bitstamp, whatever. You just go through a KYC procedure for anti-money laundering and CFTC, combating of financing of terrorists. You verify yourself, and then you have to declare your income, you have to declare your social number, you have to declare why you want to buy the bitcoins, you have to declare where are you want to send them, if you want to send them somewhere there, and only then you are allowed to buy some with your credit card, or you just make a bank transfer and then you buy it from your account in whatever exchange. And you have the third option, which is to earn your bitcoins or any other cryptos. So that's a suggestion I can make. You can start accepting Bitcoin and other cryptocurrency for the services you provide, for the goods you're selling, or for your labor. You exchange your labor, you exchange your time for Bitcoin. And that's how you earn it. So that's 3. Now, the use cases. Let's see where to use it. One of the first and most common use cases right now is as a store of value. Why? Because fiat currencies are deemed to lose purchasing power over time. They are losing the best rate, the central bank's target rate for your money to be depreciated, it's 2%. Since we lived the COVID era with a high inflation, and I'm speaking again and having in my mind Greece and Europe, but since it's multicultural, this awesome event, I believe you can understand people from other countries with hyperinflation, like Argentina, Bolivia, Brazil, Turkey. They may understand better why Bitcoin is a nice store of value. Of course, it's trading. A lot of people in the Western countries use it as trading to make money, buy low, sell high. But you can actually use it as a currency. What do I mean by that? You want to send remittance to your country, you're working in the US, you made a decent amount of money and your family is in Nigeria or in India, and you want to send a remittance without any intermediaries to pay 10, maybe 15%. You can just use it to transact and send value. You can use it to buy stuff from people that accept cryptos as payments. So this may not make sense for people that have won the geographically lottery of their birth, and they are in the Western civilization and countries which are included in the global financial system through banks. But there are half of the population which are excluded of this system, and this is a way for everybody to access it. You can get paid in Bitcoin for managing platform social media from your basement in Nigeria. And you can use that for payment. So use. The use cases in the most emerging countries is more, they can relate more to that use case. And then staking. Now I'm leaving Bitcoin and I'm going to other cryptocurrencies. Staking is another procedure, another way of verifying transaction in a blockchain, in another network. So by staking your cryptocurrency, you earn an interest on that currency. Also, if you're a developer and you want to build something on top of a blockchain, your DApp, let's say a decentralized application, you will need the native currency of the blockchain to use it, to pay the fees in order for you to develop. So if you're developing in Ethereum, you need to use ETH. If you're making a meme coin in Pump Thump and you want to pump and dump it, you want to need Sol in Solana's ecosystem. And that goes on. So, the next slide is the adoption of cryptocurrencies. The first 20 countries that scored high in adoption. This is a report from Chainalysis, the last report of 2014. I'm following this website. It's very nice. They have some specific weighted average about using and adopting crypto and blockchain. So, who do you think is the first country according to adoption in the world? Venezuela. Nice. What? El Salvador. Nice. El Salvador. Anyone else? Where would you put, let's say, USA, which everything is driven from the USA, all the stock market, all the innovation, all the unicorns, or the Silicon Valley startups are there. Everyone is watching what happens in the US regarding to the Security Exchange Committee and the regulation. So where would you put, why wouldn't you put USA in number one? Would you put it number one? Why? All right. Nice. You're close enough. Okay. This is the rate of all the countries of the world, and I urge you to Google it, chainalysis.com, global crypto adoption, and you will find it. The top 5 is first one is India, Nigeria, Indonesia, United States, Vietnam, Ukraine, Russia. So why the adoption there is so big? Why do they adopt it? Do they want to trade and make money? Is that the driven? Please, just a moment, keep that thought. There was the mic. Okay. That way, that way.
The microphone?
There?
So it's because they have a lot of currency controls and capital controls, And so Nigeria is honestly one of the most innovative countries in general. They actually started doing a lot of crypto stuff way before crypto even existed, so they were primed for it way beforehand. They need to transact value. And so what they're doing is finding anything they can to transact value. They're the ones that started doing phone minutes before we had crypto because there's too much capital control. India started taking it over when they started cutting out a lot of the currencies, when the prime minister took out a bunch of the currency, and suddenly there was this freeze on a bunch of the currency. So they said, we're going to take crypto because we still need to transact a lot of economic value. And so then they started saying, well, we're going to freeze a lot of the crypto. There's, in the US, there's a huge amount of regulation. So a lot of people started spending 6 months and 1 day offshore in order to maintain all of their crypto holdings because they wanted to make sure that they could actually take stuff. The biggest issue they worry about isn't actually the government regulations, it's the securities regulations, it's taxes. So Vietnam actually, to my knowledge, loosened up their holdings because so many people were using crypto. This is incredible. So Russia cracked down on it. Singapore let them open up. Everybody was transferring all of their money through Singapore because Singapore is one of the jurisdictions that allow people to move money very easily. Singapore is like an amazing crypto jurisdiction. When people from Russia started moving all of their money into Singapore, Russia was worried that all of their money was going to start leaking into Singapore, so they started opening up their crypto regulations. This is actually a fascinating list. So,
thank you. So the adoption comes from the use. The adoption comes from the 5 pillars of Bitcoin and open blockchains. This is what they are getting into. Open, public, neutral, borderless, and censorship resistant. That's a way out. That's what happens with such an innovative and robust technology. It comes from the bottom up, and you're going to stay here until the vote changes. What was that? From the governments, the government will help us adopt blockchain. Why? Why on earth should the government want an open, public, neutral system, permissionless and transparent? I could argue and I could vote for each municipality and each section of the government to have a public Bitcoin address where the funds can be deposited for their elections campaigns, and everyone can verify where the money is coming from, where the money is going to. So be sure it won't come from the government. I can assure you that. All right? All right. Dimitris, how much time do you have? We don't. 25. At 25? Really? Nice. I thought it was okay. Great. All right. Now we're going to we understand, hopefully.
Miscalculated your time. You have tops 3 minutes.
I thought so. I would like. All right. Let's wrap it. Okay, that's the last section of the workshop, which is storing Bitcoin and other cryptocurrencies. So, hopefully we understand what is it, we went how, we went to why, we went to how to obtain, where to use it, and now how to store it. So we go to crypto wallets. That's really significant, and I hope I'll have your attention for the next 3 minutes. We're gonna be as compact as possible. So, not your keys, not your crypto. You get that? Not your keys, not your Bitcoins, and a special thanks to Mr. Andreas Antonopoulos. If you have never heard of him, you should. It's one of the biggest pioneers in in the industry. I've never met him yet, but I really thank him because most of this presentation was inspired from him. So, we have two different sections of crypto wallets, the custodials and non-custodial, and that goes where, who is keeping your keys, who is keeping your crypto. Are you the owner of your money and your wealth, or did you give that power and that authority to an intermediary third party that we try to eliminate the whole this workshop? So let's go to the custodial first. In the custodials, we have two sections. Hyper-custodial, which I claim the originality of the word, and custodial. This is a pretty new concept. We'll go to the custodial, just the custodial. It's the easier way and more convenient way for you to acquire crypto through an exchange. So you pass all this procedure with KYC, verify you, where do you live, who are you, and all this stuff. And then you have your Bitcoin and your cryptocurrency in BTC Turk. And you're okay with that. But you should be aware that it's not yours because you have it on an account in an exchange. It's like having your money in a bank. All what we discussed about the pillars, the characteristics, and all the core values that drives cryptocurrency and open Bitcoin and open blockchains are eliminated by having a custodial to manage your keys and manage your money. That one, trading platforms, and hyper-custodials. This is the ETF holdings. Now we have merged with TradeFi. TradeFi is traditional finance. So instead of you having your crypto in Binance or Coinbase, you have it in BlackRock. That means you cannot even send them. You are just exposed to the price volatility. So it's hyper-custodial because it's BlackRock or any other custodial ETF issuers which has the paper that gave you that shows that you own you own some bitcoins that is managed by BlackRock, and the BlackRock has their bitcoins to Coinbase, which Coinbase is the custodial of BlackRock. So you get two custodials, and you just get only price volatility as an investment. Why one should use that? Okay, if you don't want to own your property and you just want clarity with regulations, ETF is a traditional finance product which is fully regulated. So if you just want that, you can use this one. And we go to non-custodial, so you make me anxious. All right? So,
it's my job
to
make you anxious.
Now, we have two wallets, two kinds of wallets, hot wallet and cold wallet. Hot wallets are the wallets that store your keys online. So you are the owner of your wealth. While you create a non-custodial wallet, you're getting a seed phrase, which is a backup phrase, where you can restore your wallet and regain control of your funds. And we have the hot, which is mobile apps, web wallets, and browser extensions like MetaMask, mobile apps like Exodus, Coinomi, and stuff. And then we have cold wallets, where your keys are stored in a device offline. It's like a USB stick. Trezor, Ledger, Cold Wallet, and other very nice companies produce this kind of wallets. And we have paper wallet where your key is stored on a paper. There is not, I'm wrapping up. There is not a right answer. And I'm not here to tell you what should you use. I'm here to tell you that whatever you use, you are making trade-offs. And you should be fully aware of the trade-offs you are making while you're using one of these, let's say, wallets, options. So on the custodial wallets, you get customer service, you get convenience, you get the kind of safety that banks provides, because if you lose your password, you have your customer service and you go a KYC procedure again, and then you regain the access of your funds. But all the things that we talked about goes down the drain. It's not open, it's not neutral, it's not public. It can be censored and it can be sanctioned, your account in Binance. And that's what happened in 2022 on the Russian citizens when they were sanctioned from the US. When we go non-custodial, you are fully responsible for your own wealth. There is no customer service. With great power comes great responsibility, as Uncle Ben said in Spider-Man. So be very careful when it comes to your personal keys and personal seed phrases and passwords when you go non-custodial. Anyway, the best way to understand Bitcoin and cryptocurrencies is to experience. No matter how many, no matter how many seminars you attend, no matter how many books you read, no matter how many YouTube tutorials you're gonna see, you can never understand it unless you use it. So, on lunch or a coffee break, I will be more than happy to help you download a non-custodial wallet in your mobile device, and I will send you some Bitcoin, not the whole Bitcoin, some Satoshis, directly with Lightning Network. You will see how it is super fast and very easy to use. So, use understanding coming through experiences, and it is not the destination that matters, but the journey itself. Thank you very much.
Thank you very much. Thank you. So, 2 points as regards what is going next. First, George is sharing Bitcoin during lunch. So, find him and get these Bitcoins. You will follow Alisa. Alisa, raise your hand. And can we have a huge round of applause for Alisa? That take care, all of you, in order to be here, and also take care, all of you, in order to eat. So you will follow Alisa to go for lunch. I think is 1 or 2 buildings away, but follow Alisa. Be back too sharp, because we have a change in the program and we are going to do another workshop here, and it's very interesting. So be back sharp at 2, and we will continue from there. Bon appetit.
And then we also have these electronic invoices, which have their own features. But there is a time now we need blockchain-powered invoices. Why? It is a third party doing the reconciliation between the 2 parties involved in the invoices, or any number of parties involved in the invoices. So the main feature of invoice management on blockchain is that you are not just having your own debit credit as a vendor, and the client is doing its own debit and credit. There's a third party named as blockchain doing that same thing on a real-time basis. So the reconciliation between organizations is a big pain point. Blockchain avoids that. So blockchain-powered invoices at the first place is required to the world. That's decentralization for a real benefit. You're not decentralizing these invoices for the sake of like creating money on top of it. No. Why? Because if now there will be some change, because if currently what is happening with the e-invoicing, I am using SAP, Oracle, accounting systems like Xerox, some invoice generating softwares. Can I change it after 2 months? Yes, I can change it after 2 years. And I will leave no trail. My client will say, no, you sent this, not that. He can fabricate that, I can fabricate that, my accountant can fabricate that. Even if we as a buyer and seller are not willing, but our teams can do that. External factors can, our hackers can do that. So the world needs a decentralized ledger to store these very important commercial documents. Because of the lot of frauds happen after that, a lot of discrepancies happened after that. So this is the evolution to the invoices, that they need to be going on a decentralized ledger, our platform, our blockchain. Then overall invoice management. You just don't generate invoices. You get them reviewed, approved with a hierarchy in the organization. Again, a lot of problems happen in that space. Again, without going into the details, you can facilitate with the help of a one common network or a ledger to connect them with a more trusted manner. And then, of course, you can connect them with the other elements of financing, payments, and all that. So this is, again, an evolution to the invoice management, that you put them on not just blockchain for the storage or sharing, you can also do the whole process of, or a whole journey of invoice on top of blockchain. What it will look like when this will all happen, because it will create lack of reconciliation, saving time, saving dispute time as well. Then is the third factor after generating invoices, managing invoices, financing invoices. Before going into that, I will just take 30 seconds to explain what is invoice financing. Imagine I have done business with her, and now our standard business practice is that I've sold the goods for 90 days payment, right? She has all the right to pay me after 90 days because this is what we have settled for. Now, I felt that I cannot pay my salaries of employees, my utility bills, the rent of my factory after 30 days. So I have a receivable standing. That is an asset standing on my balance sheet. But I cannot do anything. There is an invoice financing, a receivable financing credit line, that is not a credit, but anyways, this is like a way to get funds or get liquidity, that I take that receivable to the bank and ask them, okay, you take this payment after 90 days, give it to me after 15 days, I'll give you 5%. Just an example. That's invoice financing. Our invoice-based discounting, factoring. Again, let's not take it to the finance side. Simple. It's like earned wage access. If you have worked for some company, they will pay you after 30 days. You want your salary on third day. The employer will not pay you. But there can be a lending institution, fintech, bank can pay you early. And they will charge you for that. Similar concept to that. Receivable financing, discounting, or you call it discounting or factoring or whatever. This is what, again, has a lot of pain points without blockchain. Frauds and all that. Let's discuss those. People create false invoices. People can do errors in those invoices which need to be filtered out. They do fraud because they can do collision. Again, if she is a good friend of mine and I'm doing a transaction with her, I can tell, okay, I have sent you the goods for $50,000. Can you add one more zero so I can get more financing from the bank? 90%, yes. Very hard for the risk department or the bank to understand, is it a collision between the buyer and seller? Is it a false invoice, tampered invoice? Are already paid. Re-aging means already been paid, or duplicated in finance, already been financed by some other bank, or there are some hidden disputes because there is a stoppage of payment because there is a hidden dispute on that transaction. So this all is operational problems in the invoices which can be solved through the blockchain. And this leads to the long, tedious, costly compliance process. And what happens? Banks don't do invoice discounting anymore, because they are spending 20 days on this due diligence, and what will be the end result? Nothing, peanuts, perhaps $2,000 in revenue, and that they can earn probably a $2 million revenue in those 20 days. So they don't do this SME-based invoice discounting. So what is another major issue with this invoice financing? Every now and then you will find spams, frauds happening in this financing space. Because again, centralized invoicing can be tampered, changed, created, fabricated, duplicated every time, anytime. So all these things you receive. What this is causing? 21% of the SMEs going out of the business. Banks, investment companies losing millions of dollars because of these frauds. But the biggest problem is these inefficient invoices carry illiquidity of trillions. Because globally all these invoices have trillions of dollars lying illiquid. So I'll wrap up in 3-4 minutes, but I'll rush now. It's a big opportunity, $3.6 trillion, $6 trillion in the future. Decentralized financing platform can be enabling this, onboarding the invoices, putting them on a ledger for trust, and all kinds of like elements of decentralization, and then connecting with a unique feature, on-chain investor. I was discussing with someone during the lunch that with the blockchain, you can route this Web3 liquidity, these stable coins, these cryptocurrencies to the normal businesses, attached with their real economic activity. Currently, they are only sitting idle to wait for a bank to give them loan. Why can't this $2 trillion plus economy of cryptocurrency and stable coins give them money and also get benefit out of it? So it's a win-win for both sides, but you need a platform to run this thing. Just, I can play like a brief, and that I think will be enough for understanding how we're doing it.
InvoiceMate. From the local shop to the multinational, invoices change hands all around us. But few recognize their $3.6 trillion opportunity in the form of global invoice financing. An invoice is more than a document. It is an instrument with real-world measurable value, behind which a skyline of opportunity can be built. InvoiceMate Marketplace empowers on-chain investors to provide liquidity to qualified companies, and their cryptographically verifiable invoices obtain financing and generate stable and de-risked yields for themselves. At the heart of the InvoiceMate, the world's first Know Your Invoice system, blockchain and AI-powered KYI defeats potential frauds, the most challenging roadblock in the invoice-fi industry. The InvoiceMate's KYI, combined with other risk mitigation measures, ensure that investors are only matched with efficient and trusted deal flow at all times. Join us on the journey to the new age of invoice.
1 minute. I have already shared through video all these explanations. So with the blockchain, you can solve the problems of the real world by putting the whole journey on the chain. As you can see, all of the journey steps are on chain. Also, the AI bot will assist to do this more efficiently to detect the fake or fraudulent invoices and create only the invoices which are legit to be financed. The whole proposition is for the SMEs to get the good deals from alternative source of funding, skipping this. And this is important that blockchain also enables metaverse. Today, no one discussed about that. It's future as well. So this can be enabled as well through blockchain. So in future, you can have the lending institutions, banks, and all that environment of a metaverse where you can go without leaving your home and be in that space for enterprise use cases are the entities to get the loans. So the last slide, this is what, this will be my last slide, that we are changing the invoicing benefits with the help of blockchain. That's it. There are some more slides, but I respect the time as well. We can have this in some time later as well. Q&A or skip? Sure.
A huge round of applause. We are going to get just one hot question. There is someone that is really eager to ask. I see a hand there, so.
Mohammed, thanks so much. Just briefly, if you could walk us through, as soon as somebody signs up for InvoiceMate, what happens?
So that's a very good question. Blockchain applications have to have a very easy user journey as well, ease of using it as well. So they need to just do the invoicing on top of the InvoiceMate, right? Rather than doing it on some other platform. In the back end, their credit score getting generated, their eligibility getting generated. And once there is eligibility or credit score reached to the point, they will have an active status of applying for the loan. That's as easy as it can get. So after doing invoices of some amount, some number, they can apply for the financing, and that financing will be routed to them in their wallet without stablecoin cryptocurrency, because they don't pay salaries in cryptocurrencies or stablecoins. They pay salaries in fiat money, liras, dollars, euros. So they will receive it in that way. Similarly, they will pay back in the same currency. Our system will do the exchange conversion and give it back to the Web3 investor or the financing institution in the shape of cryptocurrency. So that's how easy it is. Yeah, of course, we do the demos.
So
but again, all of this is not meant for this one project. My point to highlight here is that you can also solve problems with the blockchain of common conventional businesses. I picked one. This is a success story. You can pick 70 other options and again build a story on top of that, success story on top of that.
Thank you very much. So pick a problem and solve it. And as regards the metaverse bank accounts, my bank account in the metaverse is really great. So thank you very much. So a huge round of applause for Alexandra.
Oh, thank you. Yes, please applaud me. No, I'm kidding. Okay. Here, let me put this down. My introduction. So, that's, yeah. And then this to advance. Okay. A few housekeeping things first. You guys want to get up and stretch first? For a quick minute? Get up.
This is my kind of...
Yeah. Get up. Stretch.
You stretch, you
While
take
you're
a
stretching,
deep breath.
I'm going to give you a few housekeeping things. First, I don't mean to offend anyone. I'm an American, right? I'm an American. My humor is American. It's not intended to offend. I use a lot of colloquialisms and things that are common in America, but it's not meant to offend anyone. If you're offended, I apologize directly, deeply, sincerely to you individually. Okay. The other thing is I have biases. Sit down. You can sit down when you're ready. I have personal biases. I lived through a bunch, in the US we had a bunch of bank disasters starting in 2008 and continuing onwards. So I have issues with banks, for example. I have problems with the things that they do. I have some biases. I will try and call them out to you so that you can consider those in your own analysis, right? Just know that I try to take them out as much as I can. Sometimes they're in there, they're blatant, so that you know I have a bias here. Put in your own, remove it, just consider that we all come with our own biases. The next one is, I assume that you know the basics of blockchain at this point, like what smart contracts and oracles and things like that are. If you don't, right? Ask me afterwards, after we're done with all of this, if you want. I'm happy to explain it, but I don't want to go over the details of this because then we're going to miss all of the other stuff, which is talking about the fun stuff of DeFi, right? So I'm just going to assume that there's a certain level of this and that you understand what dApps are and that you understand what the craziness of DeFi is right now, and the stuff of, I don't know what happened there. Okay, you understand the craziness of like what's happening, that people are offering crazy amounts of interest, like 200% interest. You put money in, you get 200% returns, sometimes 700% returns. Crazy, crazy stuff that's going on there. That's all called DeFi. All of that stuff goes on right now. So just know that that's right now what we call DeFi, along with some other stuff, but that's interest rates on your money. And that is, we're gonna address that in here, okay? So just, those are my little housekeeping things. Just keep that in mind. Okay. I'm just, as a quick introduction, my name is Alex Damsker. I am a corporate and securities lawyer. I used to work at the U.S. Securities and Exchange Commission, also this big international firm called Mayer Brown. And I had my own practice. I founded 2 companies. I exited. I've been in blockchain since 2016. I've been in AI and quantum computing since 2019. I advise a variety of companies and funds and investors. I offer workshops to help companies better understand how to build and grow startups and integrate blockchain and AI technology to add revenue and reduce cost. I wrote a book on DeFi and financing for O'Reilly. It's called Understanding DeFi. It came out this year. In case you're wondering, or if you've seen it, it's a mongoose on the cover, not a ferret. Just proves that I don't know what a mongoose or a ferret look like in real life. I had no idea. And I have a newsletter called the Damsker Report on Substack. If you're interested, it's really good. It's not boring. Okay, so that's my intro, and now we're going to talk about, actual stuff. Okay, as I mentioned, I'm not going to talk about what blockchain is, but I'm going to comment now on what DeFi isn't. Okay? Ooh, right on. Okay, it isn't gambling or betting or that speculative mess that we have right now. First, we need to be clear, there is no such thing as money sex, right? So for everybody out there who thinks that putting money in a box and playing some Barry White or Bruno Mars when he's in his silk phase and putting it in a piggy bank or in a box under the bed and bow chicka wow wow, there's gonna be more money, like money babies in there. That is not what happens. There is no money sex, right? But it'd be really cool if there were, but that's not what happens, right? Because that's stupid. Things don't turn into more things on their own. That's not how it works. But somehow in DeFi, this is exactly what the principle that most DeFi dApps are working on. dApps are decentralized apps. So basically it's an app for anything that's blockchain is called a dApp. So basically they've got tokens that are supposed to be locked up, and they're gaining interest for doing nothing but sitting there. Sometimes it's listed as a reward, sometimes it's an interest rate, but it all basically comes out of the founding team until they can't pay it anymore, right? So then we get to the question of, what is their business model? Because no business can make money giving money to users for doing nothing but sitting there in a box, right? Eventually, the money they keep promising you is gonna run out. And then it can only come from one place. That place is other users. What is it called when you pay users with the money from other users? Ponzi scheme, right? Those are bad. That's a lot of DeFi right now. That's not really what DeFi is. That's speculation and garbage, right? That's a lot of what's going on right now. That's not at all what DeFi is supposed to be, right? So on top of that, we've got this tendency to use money Legos, which is this transactional, you use these these tokens that represent a transactional fee that's plus an asset. And it's basically, it represents some collateral, and it funds a huge array of additional transactions. And it's basically a house of cards that's under collateralized. It's basically because you put a couple of tokens, like a pair, into a pool, and you get a token that represents the assets that you submitted, and you get a piece of a transactional fee. And then you take that token representing what you put into that fund, and you start using that token, that representation, and you put it into additional applications, and those additional applications think it's backed by your original pair token. But basically, every additional application you're trying to use your token for, every additional application, that's basically like 5 additional applications that are trying to be collateralized by one base pair that you originally put in. I can explain this in more detail. I don't want to run too long, but this happens all the time, and everybody mistakenly says DeFi is over collateralized. It's under collateralized. That's bad. Okay, and there are even ones right now that promise returns, because there's one that specifically says this: we invest with the banks, but we get better returns. Who thinks that you can actually be a partner with a bank, and the bank's like, yes, this is our deal, come join us, and you're gonna get the better percentage return? Who thinks banks are charitable in any way whatsoever? You work in a bank. Are you charitable in any way whatsoever in your job as a bank? The answer is no. Say no. 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 Absolutely not. There's no bank that got to be a bank by being stupid. That's not what they do. They take your money, they make it do work, and then they get you to pay for the money that they're making. They charge you to make a profit off of your money. They don't give some of that money to you. They charge you to make a profit off of your money. It's freaking genius, honestly. But that's what banks do, right? This is what banks are working with. And somehow people are being fooled, saying that they somehow got into a deal where the bank let some guy get the better end of a bank deal. This did not happen. So there's a lot of crazy scams out there. Anyway, the odds are not in your favor. If someone's telling you that you're investing in something where you're getting a better rate than the bank, the odds are not in your favor. Okay. There's so many ways Ponzi schemes can form and have formed in DeFi, and these are really, at best, poorly conceived business models, and at worst, it's just chicanery. And that's not what DeFi is. So now let's talk about what DeFi actually is. Okay. DeFi is just finance. That is money making money. That's what finance is, money making money. DeFi, decentralized finance, means money making money without an intermediary, right? That intermediary is banks. So money making money without banks. And that means doing what banks do best, which is creating economic velocity by converting assets to currency and then back again, right? It gives money a job. That's what banks do. Banks give money a job. That's what they're best at. And DeFi will give money a job without having to go through a bank. We don't need banks to do it anymore. So just a quick note here, P2P finance, which is peer-to-peer finance, is not person-to-person, right? It's party-to-party. So that means that institutions and enterprise can use this too. So let's look at our core problem. What are our goals? So money has to move. That means money needs a job. It has to move through a system. As I mentioned, people aren't getting returns on investment based on money coming from paid loans or bonds, right? That's the problem right now with DeFi. Money is not working. It's sitting in boxes somewhere, right? It's not going out to loans. It's not doing something that comes back in interest rates. Money in a job is basically like renting out a truck, right? The money is a truck. When you rent out a truck, you get paid a fee because you can't use that truck while someone else is using it. The rental fee is called interest, right? So your money has to go do a job and then come back with a fee for the job that it did. If it's not doing a job and coming back with a fee, then it is being wasted. It's not doing anything. So here, all that's happening for the most part is that it's getting increased future valuations as a result of wild speculation, usually during bull runs. And this is just called economic churn. That's a rapid spin up of market price that represents nothing in actual value. It's basically people just saying, I bid this. This is what I think it's worth in market price. And someone says, sure, I agree. I'm going to pay you this. And then they say, okay, now it's worth this. No, it's not. There's nothing there except a bid and an ask. That doesn't mean that there's any underlying value supporting that price. So our goal is real economic velocity, turning assets into liquid currency and back again, which represents real value. And how do we know it's real value? Because the money is used primarily in financing things that generate returns, although it could conceivably be used to generate personal income as well. You can use it to get money for yourself because that represents disposable income. If you use it to get money for yourself, that's still money that you spend. That money you spend goes into the economy. That's fine. It just has to generate money that's real money that goes into the economy. It can't be phantom value. Phantom value doesn't do anything. It has to generate real money that someone can spend somewhere else in the economy. That's what it has to do. So real finance comes from work. So if your money isn't sweating for you or someone else, it can't be multiplying, and that is not good for you or the economy, right? Your money has to sweat, like I am right now. All right. So currency, whether fiat or otherwise, has no real value if it doesn't move. That's why high savings rates in economies are just as dangerous as high inflation. In order for currency to be useful, it has to do two things. It has to maintain a relatively stable value, and it has to move through an economy doing work. But not everyone has easy access to conversion of assets into currency, and the banking system is rife with undervalued assets, hoarded wealth, poor decisions, improper allocations, and allocations based on incredibly idiotic reasons like the education of the founder's parents, where the founder resides, and other incredibly stupid reasons like that. These are very common reasons for banks to withhold access to currency velocity. What does that mean? That means things like where you live, where your parents were educated, where you were educated. These are reasons that you don't have access to money through banks. Those are common reasons that banks will not give you access to capital, right? You can't convert your assets, whatever they are, they could be raw materials, turning them into like some sort of financial, turning them into a business, trying to liquidate your assets, doing something, right? Whatever your reason you need a loan, you will not be able to get one for many reasons that have nothing to do with your ability to turn those assets into viable forms of currency, right? That's a problem. So the biggest issue is that since 2008, particularly in the US, banks tend to favor the least risky investments because they can. It reduces their risk, and it tends to benefit them as individuals socially and politically, even though it harms us economically and as a society. Okay, so here, this slide, I know you guys might not know the reference, but more people equals more money, and fewer problems. But if you don't know, this song is Mo Money, Mo Problems by Biggie Smalls. Y'all might know that, not know that. Remember the East Coast, West Coast feud? I recognize I might be one of the only old school rap fans here, but it's funny if you know it. Thank you for the one person back there who remembers Biggie. Rest in peace. Okay, so, all right, we're going to move on from that one. No, that was Bob Marley. So, no, very different. He did Big Papa. Y'all don't remember Big Papa? Hypnotize. No? I'm going to cry a little for the loss of culture. Do you guys remember Tupac? Anybody? California Love? Okay, all right. So the battle was between Tupac, right? So Tupac was killed, right? So the East Coast, West Coast battle. This is an important cultural moment here. So the East Coast and West Coast rap battle was a big cultural difference. And this was because there was some illicit relations going on between some of the parties and their spouses, and not between the spouses that were married to each other. Okay, so Tupac got killed, and then Biggie got killed, and then they shut down the whole East Coast, West Coast feud. I personally am a fan of the West Coast rap style. From that came Dr. Dre. Hey, no, we don't thumbs down the West Coast rappers. We got Dr. Dre and Eminem came out of that. Anyway, all right, I can educate all of you on this. But anyway, so Tupac was a fatality of that as well, and we're going to move back into DeFi, but it was a seminal moment. And you're welcome. Okay. The future of DeFi is this decentralized peer-to-peer finance is meant to remove the middleman, picking winners and losers in the middle, and allow millions of people to flourish as investors and asset providers in pockets around the world, right? If you have an asset and you need liquidity, which means cash, you have any asset, and I'm going to talk about how it works. You have an asset and you need cash, you'll use this system. Also, as an investor, it's going to be the least risky, but of course not risk-free, set of investments that you can enter, right? So, and how are we going to do that? I'm going to talk about that in a minute, but it's going to be based on assets, not debt. Currently, our finance system is based on debt. If someone doesn't pay, the whole system gets screwed. This system is based on assets, things people have, and the benefits that arise from it. It's a much better system. So how are we going to do this? And that creates economic growth. Oh, hold on. Go back. Go back. Okay. So how are we going to do this? We're going to marry the currently independent areas of real-world assets. If you guys have heard that, real-world assets that's currently rising, that area, plus NFTs, plus DeFi, plus asset-backed tokens, all of these independent areas all coming together into DeFi. All of these are headed in the same direction. Even AI is coming into blockchain. It's all coming together, and we've all been headed to this one place. So you'll see this is where we've been headed the whole time. And all of this you'll see is going to create healthy economic growth. So now let's consider who would use this, right? So DeFi is for anybody who wants to make money with their money. So for retail investors, it could be anybody who wants to gain interest on their currency outside of bank finance or bank financial tools, including people who can't get money or can't use those financial tools because it's too expensive to use them through the banks, or the banks say you have a minimum of investment requirement of like $10,000, $50,000, or $100,000, and they don't have that, right? Often a minimum investment is $10,000, $50,000, or $100,000 with a lockup period of 6 months. Many people don't have a spare $10,000, $50,000, or $100,000 that they're like, sure, keep that locked up for 6 months. That's just not in most people's, capabilities. So they can't access the bank's financial tools. So DeFi can offer a lot of financial tools, and they can offer the ability to have interest on your money. They can offer rights in assets at a discounted rate to third parties to be sold or repurchased at market rates at a future set date. So it's basically people gaining liquidity on their assets, and people who want to offer discounts on interests in whatever it is that they're offering, with the right to repurchase them later so that they can get immediate cash. And I'm going to talk about how these work. So here we're going to look at both sides of one investment. For example, right, we're going to look at, this is one where we look at founders and retail investors together in an investment. So let's say I make brandy and I got one bad crop of grapes, right? Somehow in this season there's a big drought and I'm screwed because my grapes are like, shrivelly. And shrivelly grapes make bad brandy. So this is bad. So I could go to a bank for a loan and try and repay the interest with the money that I borrow. And then here's the problem. I borrow money, loans are stupid. I borrow money and I have to start repaying it with the money I just borrowed before I have any chance to turn it into working capital. I can't actually make money on that loan yet. That's not useful. So the other thing is they want collateral. Like one of the barrels that I have of brandy, they'll want it as collateral, but they'll only value it at 20 to 40%. That's not great, right? They're going to reduce the value of the collateral. So I'm not going to get very much money. I'm going to get really harsh terms. It's going to be problematic. So instead, what I do is I take something like a half-aged barrel. Say my barrels need to age 15 years. So I take one that's aged like 7 years. And I really need money now because it's late in the season. I need some cash, so I discount it at like 30%. Right? So my brandy is like a high value brandy. The barrel is reserve, and it's gonna sell for something like $300 a bottle. It's a good brandy, right? It's a minimum $300 a bottle. So I sell it at a discount of 30%, and I sell NFTs on it, and I keep some myself. And I have to have some insurance and some assurances on there that it's going to age well, but I'm in the business of creating brandy. I'm pretty good at keeping these barrels while they age. Once the barrel fully ages, I sell the barrel. All the NFT holders, including me, are automatically repaid. All the interests are reunited in the new buyer, and the new holder can hold it, pour it, sell it, spill it, spray it, whatever they want, right? They can issue new NFTs on it if they want. That's what they get to do with it. So everybody wins. The founder wins, the investors make a profit, and they get to use all of the money that they got from those NFTs without paying it back, and they get 100% of whatever it is that they elected to raise. So the value of the barrel minus 30% in order to induce people to buy. So alternatively, let's say I need money to fund a startup, or let's say I have the misfortune of living in the US and I have a heart attack and we have shit insurance. And so I need money now. So let's say I have any asset. I can access this system by, let's say I have a famous guitar, or I have a painting, or like a nice table. So I could sell that thing outright. Or instead, what I do is I offer NFTs with the requirement of sale or purchase by a fixed date, right? So what I do is I say, look, by this date, I will either repurchase your NFTs with interest, or I will sell the guitar or painting or table and at market price, because you bought it at a discount. I will sell it at market price and everybody gets a profit, right? So either way, again, the investor wins, and ideally, the person who's selling the NFTs will be able to figure out how to get some money so that they'll be able to keep the asset, right? This basically undermines all predatory lending. This is like payday loans, reverse mortgages, pawn shops, all the people who are intermediaries who make money on desperation. All of those people are undermined by this kind of operation. Because you're setting the terms, you're getting people to buy whatever it is that your asset is and say, I'm basically going to offer this to you under these conditions. Again, you need insurance, etc. It's a very straightforward operation. The biggest difference in both of these scenarios is that all the money raised is available for working capital. It doesn't need to be repaid in whole or in part. You don't need a grant, and it doesn't weigh down your financials in debt. So from the retail side, as you see, it takes away all predatory, desperate actions. So on the enterprise and institutional side, we see vastly reduced costs to financial markets and lending. Money can move across borders and into both large and small markets for fractions of a penny. Assets can easily be assessed, tokenized, and traded in what I call CABs. These are collateralized asset benefits instead of CDOs, which are collateralized debt obligations. So large enterprise and institutions can offer assets like, for example, a large-scale real estate mixed-use development. Then they strip out the retail shop rent stream as a separate asset. A large institution could then bundle all of their retail shop streams into one separate NFT offering and use the cash immediately to fund a new development, to launch a fund of funds, to pay off debt if interest rates drop, and they could drop in a neat refinancing takedown without offering any additional equity. So there's all sorts of financing that you could possibly do with this kind of operation. The ability to gain liquidity from even the most illiquid markets would make investing in them no longer the realm of tax tooling, but as quick as setting up a token and market makers in an appropriate marketplace. DeFi replaces financing methods like factoring, expensive large-scale trade finance. It allows companies of all sizes to get secure, transparent financing without the cost and risk of guarantors and the charges of banks and brokers. The cost of exchanging currencies is a mere fraction of the TradFi world, and earning interest or revenue on sitting assets adds them to their bottom line. So the last part here is what tools, what tools do we use? Sorry. Okay. We're going to go through this. What tools do we use? So smart contracts, of course, because try doing anything on blockchain without it. The next part is wallets. Wallets are a big problem. These are stopping a lot of adoption because they're so user unfriendly, and ones that are friendly don't connect to fiat. It's a big issue. So we need a connection to fiat without banks, which we can do, but involves pooling, and that's a whole more complicated discussion. Wallets need to be like Web 2 accounts that are very simple with some sort of Web 3 HTTPS so that people feel more secure, and that the information entered isn't going to travel. It's also important that they get audited by third-party auditors, and I never see this happening. But that's a very important aspect of it. So people feel safe. They have to understand that wallets are just ISPs and calculators, so that they have to feel safe with the basic account format. So oracles. We have an oracle problem. It's not something we can ignore or easily fix. We have to figure out market pricing of assets, and that means basically a non-Web3 solution. We're going to need something like Lloyd's of London. Insurers already set market prices for most assets because they need to insure them. We basically need APIs to this kind of stuff. And eventually what we're going to end up doing is getting a meta market that averages all of this information from all the insurers, and then there's going to be another market that takes that meta market and adds in all of the collector information, and that's going to be the best price for everyone except for black markets, which are always going to exist. And then stable coins or possibly CBDCs. So there's not really a mystery here. Stable coins are a core tool of blockchain and DeFi, right? Here's the problem. All stable coins right now are destined to go to zero. They are all of them poorly designed. I go into my book if you're interested. However, CBDCs are worse, right? They're basically fiat alternatives that are pegged, generally speaking. And the worst part is that while fiat, when it's offered, it belongs to the holder, right? CBDCs belong to the government, and then they're offered to the public free of charge for use. The problem with this is that, technically speaking, unless there's a law otherwise, the government doesn't have to do anything to get access to either the CBDCs or all the transactional records. This is a big problem. There's no privacy. If you have a CBDC and the government wants to access either your money, your CBDC money, or how you spent it, they don't have to have, at least in the US, right, probable cause or some government regulation, some government met requirement to ask for that. I just dealt with Visa on this because they're setting up something on this. This is a very complicated but important topic. It's theirs already. They don't have to request it from you. There's no privacy. It's a very important issue. Okay. The next one is incentivized governance tokens or native asset-backed tokens. These are another key tool of DeFi. They have rights rather than money backing the token. These tokens shouldn't provide rights in name only. If they do, which I've seen some sneaking in, they are no bueno, not good. Those are not the same as incentive-backed tokens. Insurance, Lord, and assessors. All right. To assess the value of assets and insure against loss, and eventually come up with a set of procedures required of all owners automatically in different categories. This is a really important one. This is the thing that protects both the founders and the investors when we're dealing with assets. NFTs, these are baskets of rights. That's what NFTs are. They're baskets of rights that can be stripped away, given, removed, individually, in groups. NFTs are one of our most powerful tools. They are not cartoon cats, right? That's not what an NFT is. That's a cartoon. NFTs are baskets of rights. And this allows you to see the source of the asset ownership and the rights in each NFT being offered, if they're self-limiting, if they're reoffered or sold. And this is just going to be the way that most assets are offered. We're going to need appropriate permissioned or public chains, depending on whether it's for retail, enterprise, or institutional owners. The volume and size of the assets, it needs to be scalable. It has to be cheap but not free. And it places a high value on security. So identity tokens are very likely to be useful here. And you'll need appropriate market makers in order to ensure liquidity and movement can happen. And you're also going to need marketplaces or portals for legitimate sales to happen. And then what rules are we up against? There's general inconsistencies and vagaries in most jurisdictions, including in the US. If you want to talk about this later, this is the issue, particularly when we talk about post-Chevron world, the Loper-Bright ruling. This is a really big one in the US. Most people don't understand the implications. I'm not going to go into it here, but this is a really big one. So a lot of what we're talking about here does meet security regulations in many jurisdictions, especially the ones that follow US rules. So you have to look at your security regulations in whatever jurisdiction you're in. You're going to have to look at the tax regulations and whether capital gains or personal income or something else is involved. You're going to have to look at treasury regulations because they're fiat and fiat adjacent, including the Bank Secrecy Act, which most people have to deal with. That's many countries. You're going to have to look at securitization regulations because we're using collateral, and nearly every country has something dealing with securitization or the use of collateral. Custody regulations. This is another big one. How do you custody digital assets or assets in general? It might be looped in. Common law. If you're in a common law jurisdiction, you need to look at case law and see how that gets roped in. Legislation and treaties, particularly regarding assets of high value to a particular jurisdiction, things not allowed to leave borders, and things that can't be transferred to particular parties. FATF, which includes the travel rule. This is the Financial Action Task Force, includes 39 member countries and 200 jurisdiction observers. This is about Regulation 16. This is the rule that ate all of crypto. This includes every jurisdiction in here and all the jurisdictions that are not in here. Everybody dealing with crypto has to deal with FATF, and that deals with here. KYC, know your customer, which is basically what's the risk of fraud and corruption that any customer represents. Anti-money laundering, which is basically, what is the risk that the money came from a bad source. And these are the two main reasons that ZK identity tokens are probably going to be needed, and they'll add compliance, speed, and privacy. And then you'll also need to understand the VASP, or virtual asset service provider rules. Okay, that's me. I know, that was a lot.
Thank you very much. So, I want to take a very, very big breath, because these are all too much, but I'm counting on you, and give a huge round of applause to Ayşegül.
Thank you. Hi everybody, I know everybody is a little bit tired. And I think some of you who is not very familiar with blockchain is the day which you hear most blockchain in your life, right? Because it has been too much blockchain talks today.
He's here, right?
Yes. Okay, good.
Thank you.
Thank you. So again, hi everybody. First of all, thanks a lot for this organization, Dimitris. I think the variety is quite important, especially while we are talking about the emerging technologies, because if the people or communities in different sectors attend, then only this technology can grow. Let me introduce myself and what I am doing in a very quick way. I will not keep the presentation too long. We can have a chat afterwards too. So I'm the chair of Istanbul Blockchain Women Association. It's an association which is empowering women in the blockchain ecosystem and technology. This happened for a reason. I know that not all of us are from the tech sector, but if you go into the tech sector in any event throughout the world, you see that it is very man-dominated. It looks like you're in a football match where you can just count women in the salon. So we started this organization as Istanbul Blockchain Women, but then it evolved a little bit. Now we are giving free trainings in blockchain, emerging technologies to students, girls, women all around the world. Fuse is my company. I professional work. Fuse is Abu Dhabi, Dubai-based fintech. It's a regulated digital asset service provider. I'm the general manager of Fuse in Turkey and Turkish region. So the Otenya is another NGO which we are also empowering C-level women in the corporate life. These two other is the blockchain-based non-profit projects which is helping especially NGOs to donate through blockchain and crypto. So, but today's topic is, I said in the beginning, is going to be crowdfunding and blockchain. So for Fuse, anybody who is interested, it's an API-based B2B company, which we are regulated in multiple markets. Dubai, Abu Dhabi is one of them. We are regulated in Europe, and also we will be a regulated actor in Turkey, which we recently have a regulation about blockchain in Turkey. So we are backed by Abu Dhabi government fund. So it's quite a strong fintech in the region. We will see how it goes, but I think Fuse is a good example of a combination of Web 2 and Web 3 as a blockchain company. So I will explain what Web 2 and Web 3 means too. So today, it's going to be about blockchain technology a little bit, not deep dive. Turkey, so as you might recognize that Turkey is a very high adopted crypto company. I'll show you some numbers. Crowdfunding and the intersection of blockchain and crowdfunding, and almost that's all. So while you are in the very heart of Istanbul and you have faced the different colors of Turkey as Istanbul, I will give you a brief information about Turkey because I realized that my presentation was a little bit different, but then I realized that there is this community who doesn't know anything about blockchain, who wants to learn, especially who wants to learn not technical, but what am I going to do with blockchain? And also those people, while you are in Turkey, you need to learn a little bit more about Turkey. So, and I see many neighbors of ours, like from Armenia, Georgia, Bulgaria. So we are all surrounded by Bulgaria, Greece, I forgot Greece, Armenia, Azerbaijan, Iran, Iraq, Syria too. As you might see, we are living in a very hot topic area, let's say. Almost all around of us, there is war going, like Russia is in the war, and yeah, Israel is on the war, and Iran, Iraq. So because of that, it also helps Turkey to grow faster in the emerging economies because it's a flow inside and outside of Turkey. So I think today is like that. This clearly explains today. When you are attending a conference, you cannot expect in one day to understand all of it because we have very limited time, but we want to learn everything. It's not always possible. And especially if you are not familiar with tech, even if you are familiar but you don't have a tech background, especially in blockchain, it is most of the times very hard to understand because there are so many words going on like dApps, DeFi, blockchain. If you are not familiar, you just got scared. This is why we are here as an association and all these people who are working on blockchain tries to tell you understand more and more to get into this business. So Web3 is actually a big umbrella of today's applications. We were in Web 1 in around 1990s, where we can only read whatever is given to us, right? It was the first phase of Web. Then Web 2 comes around 2000s. So at Web 2, we are not reader only, but we also started the creation of the content of ourselves. So we become customer of internet in Web 2, which we are in right now. But with the help of blockchain, what is Web3 and blockchain related? Blockchain is what Web3 is made of. It's an infrastructure where you make Web3. So in Web3, you own your own personal data or whatever you have in the internet. So now we are in the different phase of internet thanks to blockchain, which we call Web3. So all these applications we have been hearing from the beginning is under Web3. So we have been hearing the cryptocurrencies and digital assets from the morning. Just a quick intro about the digital assets. Cryptocurrencies are the first child of blockchain. This is how blockchain becomes so popular. Comparing blockchain to AI or any other technologies, it's not as easy as understand like AI. For example, in AI, you just give some information, it gets you back, and you can hold it, you can see it, right? It's easy comparing to blockchain, but blockchain is an infrastructure. So if you, as I said before, if you are not a tech background person, sometimes it's too complicated to understand. But cryptocurrencies become so popular, so people become to understand what blockchain is, or they first think that blockchain is cryptos also. Nowadays, it's changing, but cryptocurrencies is like that. Stablecoins, as said before, it's again a cryptocurrency, but it's backed by a regular money, like USD or Euro or Dirham, something like that. So stablecoins is another cryptocurrency. CBDCs is central banks, because money is always under control of central banks. They said that we should do our own stable coins, digital money, which they call CBDCs. They are not actually, you cannot call them as cryptocurrencies. It's just using the blockchain technology, but philosophy is totally different, as said before. And tokenized real-world asset is, I think, upcoming way, which is you are again using blockchain technology, tokenizing real-world assets. It can be a real estate, it can be any fund or something. So I think this is an interesting data. You might have seen in the previous presentations. Crypto is very look like the adoption of internet. It's increasing like crazy. So when internet first comes out, nobody believed that it would go big that much, and it will influence all our lives. The pattern is almost the same. Last year, the graphic was like that, and it was 120 million yearly transaction. Today, it's 220 million, and in total, it goes up to 420 million transaction. So it's growing tremendously. And before, I think there's early adopters of blockchain here. 4 or 5 years ago, when we are talking about blockchain to any bank or any governmental institutions, they don't care about you, and they talk that crypto is a scam. No one will use crypto. You are just a dreamer, which is a good thing to be a dreamer. But nowadays, we are seeing mass adoption to blockchain and crypto, which is very important, especially for you, my young friends, to get a space in blockchain industry. It's always the right time. Like, it's never late right now, because it's growing like a lot. As you see, JP Morgan, MasterCard is our strategic partner in UAE and Turkey. They're also in blockchain. They're all giving and providing services in blockchain right now. And there's a nice story of mine. 4 or 5 years ago, there was a conference about crypto. The head of banking industry kind of a organization speaks and says that please stay away from crypto because it's a scam and you can get hurt. 4 years later, there's another conference about crypto. Same guy take the microphone and said that only banks can get the license for crypto because it's so important and only banks can do. So Turkey has an interesting situation in the crypto ecosystem. It's not only because it's not legal yet, it was not legal yet, but there is another reason laying behind. We are the 4th worldwide in transaction volume. We have more than 10 million users, and it's going up to 20 million users, which our whole population is almost 80, 90 million. And if you compare the young population, it's a lot. Every 2 in 5 citizens holds crypto. And the crypto adoption in Turkey is extremely high comparing to all the other regions. As you can see here, we are dominantly using stable coins, especially Tether. In many regions, we are number 1. We are 3 times bigger than Saudi Arabia, which is in the second, and UAE also. So it's a huge market. Because it's a huge market, all big companies are coming to Turkey, exchanges, other crypto companies. So Turkey already become a mature blockchain crypto market. The reasons behind why we are using this much crypto is actually high inflation and economic instability. And we also have young population, a lot. So because of the young population, these people mostly like to earn in a fast way, and because of the Turkish lira is losing so much of its value, people want to, especially the ones who are keeping stable coins, wants to store their value in stable coins. Because in banking system, it's not easy and it's not that active that you can hold and just protect your money in that way. I'm sure that many of you who are not from here realize that there is cryptocurrency exchange ads all over. It's a little bit less right now because I think a couple of weeks ago, capital market boards issued a paper saying that you cannot promote cryptocurrencies if you are not licensed. But if you come 1 month ago, you will see cryptocurrency exchanges all over. It was the same when the Forex licenses were not on the market yet. So it was all Forex. Now it's another way. As said, 66% the reason is profitability and ease of monitoring, no minimum investment, secure, low transaction costs, and it's a promising technology. Even we are one of the highest traders all over. People also learn more about technology. It's an interesting data. The usage of investment instrument after Turkish lira, cryptocurrency is the second one. It's also very surprising for the financial industry too. And most of the commerce to crypto is like 27% of participants are new entrants. So market is growing. I think the alike markets like Turkey will be the same. So Turkey is a good example. That's what I keep on telling about Turkey. So let's get back to our topic, crowdfunding. Anyone who doesn't know about crowdfunding, crowdfunding is when a crowd funds a project or business. So you have a business, you can go to bank, ask for some loan, and you try to grow your business. But it's always important, especially like when we are talking about crowdfunding, to get 1 million from one entity is totally different. Get 1 million from hundreds of people. This approves your product market fit. This gives you so much support in your business. So why crowdfunding is important, especially for startups, is it's an alternative finance. It also helps you to be in the society with approval. There are different types of crowdfunding. One is like reward-based, or like say, I'm making a film. I'm asking for 1 million Turkish lira. You are giving me some money, I'll give you a free ticket. This is reward-based crowdfunding. The other one is donation-based. I'm an NGO, I'm looking for some money. You just donate, you don't get anything back, but you are donating a company, an NGO, an organization. The other one is, the biggest part is peer-to-peer lending. So it has two types, equity-based crowdfunding, which is regulated in Turkey, and the other one is peer-to-peer lending, lending-based crowdfunding. In equity-based crowdfunding, you can get shares from any company through a platform. So this is what we call equity-based crowdfunding. We didn't have regulation before, but 2-3 years ago, we received regulation. And now it's very alike with blockchain-based crowdfunding, because in blockchain-based crowdfunding, you just tokenize the shares of these companies and you get these shares. Again, a little bit information about Turkish startup ecosystem. I think this is more important. Comparing to the other regions, I'll show you all countries in the next slide, is $700 million were invested in 388 deals. So the regular path of Turkish startup ecosystem is they are donating small amounts to a lot of companies. So it is very good fit to crowdfunding also. So you can see that Europe Deals League in 2024, you see the Turkey in the first league. If you see United Kingdom, 1,166 companies to 13 billion. But if you see Turkey, 700 million to 388. You cannot see any like high number in the other countries. Again, like startup ecosystem is very active in Turkey. It was very active right after pandemic, but in 2023, economy didn't go well, so people are just decreasing their investments on the startups. So, again, equity-based crowdfunding is a regulated activity. Whoever just interested in blockchain and licenses, it's also important. There might be a channel in Turkey. The tokenization rights might be given to crowdfunding platforms in Turkey. It's still under discussion, but because the system is very alike, so it's possible to, for equity-based crowdfunding platforms to also tokenize or ICO the startups' funds. But as you see, because of the economy, it just drops down, and there was it was very promising market in the beginning. Everybody tries to get this license in Turkey. It didn't go well because of the economy. Actually, economy is very effective on these investments. It's a highly risky investment to invest in a startup through a platform. But it's like crypto, so they both have high risk and a high return. So this is the intersection of crowdfunding and blockchain. Nowadays, we are using the regular finance tools for crowdfunding. But when blockchain enters the crowdfunding industry, then we can have lending-based crowdfunding, which is lending-based, is also regulated in Turkey, but nobody is doing this yet. This has the biggest share. The secondary market, we also don't have it yet. And like, if you invest in one company and you don't know where to sell or you have to keep it, then it's not a very logical investment. The digitization is important, where blockchain comes into the scene. The digitization of these shares helps you to open your company worldwide, right? So anybody in the world can invest in your company through blockchain. We are doing one active project with that between Qatar and Turkey, and the Qatar University, Qatar Financial Center, and one university in Turkey. We are digitizing startups' assets, and both in Qatar and Turkey. So anybody in Qatar and Turkey can invest any of those startups, and also it will be under regulated entities, so people can switch those assets. Because being only in blockchain also might not be very helpful. It's gonna be only in blockchain, so how you gonna ramp or ramp off, or if anything bad happens, where you gonna go to law? So it also needs to be supported by regulation. So once blockchain comes into the point, it also turns out a really financial tool, like a crypto exchange, but you can buy and sell the tokenized assets of startups or any companies. So what is the advantage? It's data security, transparency, democratization, of course, because now we are under so much heavy regulations, especially for the startups. It's not easy. There are too much limitations, integrity and efficiency. So this is another topic which I will just sum up in the end. We are talking mostly about finance and how blockchain helps finance. But on the other hand, blockchain might help so many other things too, which is, one of them is social good. Blockchain can help totally to transform NGO world or social economy to something else, which we have a use case, which happened. We had a terrible earthquake in the beginning of 2023. Just like a big war happened in Ukraine and people cannot reach their money, during these earthquakes, all banks were closed. People cannot just go to get any money. Hundreds of millions of people died. So we started a collaboration with Web3 community, and I also am co-founder of one of those organizations, is SOS Chain, which is blockchain-based fundraising. So we raised $12.5 million through crypto community, spare it to the earthquake area, and we built some container cities for the ones who got affected from the earthquake. So when all those people, they never seen any crypto in their life, most of them. They don't have any wallets. They don't know how to open a wallet, how to store their money in the wallet, how to just keep in mind and not to lose 12-word passcode, etc. But at this time, when it's forced by the life, then blockchain solves many problems. Now we have another initiative. It's for Islamic community mainly, but it's going to be digitizing zakat because there's too much corruption in this zakat and all this stuff. So blockchain helps you give the transparency and helping you to transform most part of the world, and hopefully in the upcoming future we will see more living examples of blockchain other than finance. Thank you so much.
Thank you very much. Do we have any questions? No? Okay, well, we can get one question if... Everybody is tired, of course. So, without further ado, in order to move forward to our next topic, I want to invite on stage. So, give me just 1 second to load the presentation. So, Geek, are you ready? Super. This is the part that you are uploading, Geek, so.
Hello everyone. I know it's the hour that everyone is already very tired, and I myself am as well. So we'll just try to have a very quick understanding discussion about it, and then we'll wrap it out, and then we'll get ready for dinner, right? Okay, I realized in the previous sessions, we don't really know how many people come from which sector exactly here. So I want to get the statistics, because knowing your audience is very important to deliver whatever that is helpful for them. Yeah. So I'm just going to send a slido.com poll on the group chat, so everyone can basically identify yourself. Yeah, which sector do you belong to, or do you work the most in? Okay. Okay. Yeah. Should be interesting, because the topic that I'm doing is 3 very different things: AI, blockchain, and FinTech. So blockchain plus FinTech basically is DeFi, right? Decentralized finance. So I want to know the understanding. I want to have an understanding what everyone knows more about which sector because of your educational and also work experience. Yeah. Yeah. Okay. I don't have the slider here yet, but let's see. Okay, is everyone done with the Slido? Yeah. Is everyone done? Yep, yep. Wow, okay, so far it seems like there is 63% on AI, 21% on it's decreasing, okay. Wow, okay. So there's really interesting statistics. Crypto is so far less than 5% when it comes to industry representation in this room. So yeah, interesting. Okay. Yeah. So about me, I'll just briefly introduce a bit of my background. I didn't manage to include in the slides because, yeah, I was doing something else. But I work in consulting, so I basically look into digitalization and sustainability for the industry. I work closely with industry association instead of 1 or 2 companies. So usually what I do is I look into big data and figuring out what works and what doesn't work. Okay. So yeah. So yeah, AI, I think there's enough people already talking about what it means. So I'm just gonna scan through. Yeah, basically it makes complicated human-centered tasks easy with just 1 search, 1 click. But I think I realized nobody talked about generative AI definition just now. So basically the difference is self-explanatory from the page. It relies on big data to make content for yourself. For instance, ChatGPT, other things. So big data and it's crucial for regenerative AI, right? Without it, without scraping the internet, you can't really get the kind of content in lightning speed, okay. Blockchain, yeah, I think too many people talk about it, so I'm just gonna skip a definition. DeFi, yeah, so basically, in short, using blockchain to do financial transactions openly on the net, yeah. Okay, so I was actually one of the Bitcoin skeptic, you know, I mean, still am to an extent, but my opinion has changed ever since I've discovered more of the opportunities that are available from the DeFi space. So I wrote an article about it in 2022 during the Russia-Ukraine war on one of the financial newspapers in Asia that basically say there's no, it's very unlikely that Bitcoin can replace the US dollar. And I still hold the same position in that because we still need to cash out in US dollar and other fiat currencies. But what I do realize is that there are different use cases for Web 3.0, for cryptocurrencies that may add value to our societies. Okay, so I will talk more about it later in the project that I'm working on. So yeah, let's just, because this topic, it's about AI and blockchain coming together to do things, right? So what can we imagine from this use case, AI and blockchain? So what can AI do for us? We already know that AI is about replacing complicated human tasks in a very quick manner. We already know that blockchain is more big on privacy and security. Yeah, privacy and security, so that's basically what we think of when it comes to blockchain. And AI efficiency, right? So what can two things do together in what context, right? What can we do in healthcare when it comes to AI and blockchain, right? What is important for healthcare? What is important for the healthcare sector? Patient data, yeah. And what better way to store it than blockchain technology, which is currently not used by most of the hospitals and government database in the world, right? And how can AI innovate in the healthcare space? Yes? Yeah. Yep. Yeah, that's correct. So AI basically helps the doctor look into past cases very quickly to give a clearer picture about what to do. So that's also very useful, especially in life or death situations in the healthcare sector. Drug supply chain, clinical trials, how can you make a difference, right? In FinTech, getting a loan, can you imagine AI playing a role in that? Does AI maybe can do a quicker scanning and more efficient and more accurate scanning than humans, workers, when it comes to detecting risks? Is it possible? It is possible, right? We just need more pilot projects to know and to figure out what can go wrong and what will go wrong, and then try to fix it, right? And then supply chain, what can AI and blockchain do? I think, yeah, AI, of course, detecting the opportunities, where to energy saving measures, and blockchain, obviously, it can help in tracking down the transactions to see if the whole process is more efficient or not. Yeah, so that's that. But yeah, going back to our topic, AI and blockchain in DeFi. So the three use cases that in my consulting career so far that I've talked to different people, and believe me, it may seem obvious, but it's not really implemented by most companies, right? Binance doesn't have a chat box, AI chat box for onboarding customer service. Coinbase doesn't have it yet as well. So right now, not a sophisticated one. So right now it's very inefficient, right? Like right now you need to talk to the customer service, which is a real human, and then it takes, I don't know, 2 or 3 working days to get back to you sometimes. So there's a lot of opportunities from basically using AI for onboarding experience. For instance, MetaMask, right? It's I think, like, was it you, Josh, that said it was easy to use just now, or I don't know, like one of the speakers, right? But it's actually quite difficult to use for a certain age group, right? For maybe people who are too young, people who are too old, even for people who don't really spend too much time on the internet, maybe. Yeah. just because you maybe are a Gen Z, yeah, like most people actually spend a lot of time on phone, but it doesn't mean you know how to use MetaMask. And instead of reading a manual description that is, I don't know, 2-3 pages long, it can be just conducted through an AI tutorial, right? Much more engaging, much more interactive. So it actually helps DeFi projects create a clearer understanding to its audience. And that can be a big deal when it comes to awareness spreading in generation as well. So that can make a difference with AI. Big data analysis, of course, when it comes to a cybersecurity perspective, big data is very good at telling where the vulnerabilities are, historically where people attack the system the most, where the bugs are. You know, I think AI can make a difference when it comes to pointing out the red flags, and then you can basically strategize your security measures based on that as a platform, especially crypto exchanges, which is actually not that decentralized. It gets hacked quite often from time to time. Yeah, it's possible, right? And then number 3, probabilities, recommendations, suggestions. Imagine if if you're on a crypto exchange, there is an AI guru that tells you basically what is the winning streak for this coin, instead of you reading like this gigantic pie charts in the last, I don't know, 5 years, the historical data of the coin. Imagine if there's a guru, you know, that basically help people make decisions easier, right? Yeah, exactly. Imagine if that is a common space. Right. Then imagine if that is a common feature of basically guiding people on what to do, what not to do, where you should put your money on. You know, so that can make a difference with AI when it comes to AI and blockchain synergizing together in DeFi space, right? So I want to talk about this new concept that I personally am working on. It's I don't know how many of you have heard of DePIN. 1, 2, 3, 4, 5, 6, 7. Wow, okay. So majority of people have not. Okay. So what I talked about just now, that I was a bit skeptical about cryptocurrency, I think the solution that convinced me that it can play a very productive role in our society is when I saw the concept of DePIN, which I'm currently working on it. So what is missing in a lot of crypto projects aiming to solve global problems from climate change, whatever, you know, is that they fail to humanize experience, right? Like it's all happening virtually, metaverse. In real life, you cannot see it, you cannot feel it. So people will feel quite alienated from the experience, especially people who, especially when we talk about the context of older generation, which has a lot of savings money, silver economy, but you fail to tap into this target group because you're talking a language that people don't understand and people think you're weird, right? So what if blockchain, what if fintech is tied to real life physical infrastructures, right? For instance, I'm going to give you an example. It's very expensive for anyone to build a telecommunication tower, for any company to do that. There's zero SMEs, almost zero SMEs, small medium enterprises, that can finance telecommunication tower because the entry barrier, the investment required is way too high, right? Data centers, it's cheaper, but when it comes to like 5G implementation, it's very expensive. 6G is very expensive. So it ends up basically a few companies doing that, right? And they all get money from the banks, this and that. So it makes the entire thing inefficient because there's less competition. Yeah, there's less competition, less transparency about how to do. So the services don't get better because there's less competitions. And it's become more expensive because people can just monopolize the whole thing when you have 3 companies only running it, right? So DePIN actually makes a difference in terms of, co-financing from everyone with minimized costs, with a minimal cost of hardware in your home, trying to provide value into the real-life infrastructure network that is available digitally. Yeah, so it enables many SMEs to take part, and it also enables everyone to have a stake and make money from this opportunity, to make money from this from this new way of looking into decentralized decentralized opportunities, right? So accordingly, right now we have a DePIN market space is actually worth $2.2 trillion. And yeah, $3.5 trillion by 2028. And if you basically look into the non-digital assets of the world based on IMF, World Bank measures, it could be possibly a $90 trillion US market. But obviously, we have to be realistic. Not everything can be solved with a DePIN. But imagine if you just solve a fraction of this problem, it can already be very powerful and unlock opportunities for a lot of people, right? Okay. So DePIN, in essence, is decentralized infrastructures in the real world, and individuals contribute to that, such as transport, energy, and wireless connectivity. Imagine instead of having your own modern router at home, imagine if you can rent it to someone else, yeah, through a centralized network, through a blockchain, through a decentralized network. Imagine if you can do that easily. That's it basically means, yeah, like you don't, not everyone needs to install a modem at home. You can actually share it, right? And blockchain management systems for real facilities are like market spaces, computing power, and real world data, yeah. So examples of DePIN, energy networks that I told you, telecommunications, it's very expensive. 5G is very expensive, only like, in every country, maybe only 2-3 companies can manage to get the finances to do that. Ride sharing as well, you know, it's all these centralized platforms. So imagine if you are booking an Uber, but without going through Uber, that kind of experience. And when you are driving also, maybe there's solar panel on the top of your car. And if you can connect that to a real life energy grid network, what kind of opportunities can that mean, right? Yeah. Yeah. So basically the benefits, the biggest benefit of decentralization, DePIN is basically it also has a very logical case that it eliminates single points of failure. So if one device goes offline, usually like what happens with like the CrowdStrike, you know, and everything recently, you know, cybersecurity attack. If one device falls down, usually in a centralized system, the whole thing goes down, right? And you have billions of people in the world failing to log into some software systems, you know. So imagine if it's decentralized, right? Just because one fails, there's still many that backs it up. So that the cost to the society and to the world are actually also lower in comparison, yeah. And yeah, of course, it also it makes the infrastructure more resilient, affordable, inclusive, because by participating in this project, people also can get reward, you know, such as in the form of tokenization, and then that's where we go to the crypto elements of that. Yeah. Yeah, there's a video, but I don't think we have time to play it. So, but if you just Google, if you just YouTube DePIN. Coin market base, you can read more about it. You can listen more about it in a 5 minutes video. It's a very realistic video that doesn't sell your dream. It tells you the challenges of DePIN and what are the opportunities available in the space as well. Okay. So I want to talk about the project that I'm currently working on. So I don't know if many of you have heard of, but currently the hottest data center space in Southeast Asia is actually in my country, Malaysia. Yeah. So because of the Singaporean government policy of they think data centers are too energy intensive, so a lot of them have moved to Malaysia, which we have abundant renewable energy, which big tech companies love because of their net zero policies. Yeah. So So what we do is that we let people rent and run an AI node with us. So what we realize is we have seen like an increase of investments from global tech, such as I think ByteDance. They recently pledged to build a $1 billion data center in the south of Malaysia, and many other companies as well. Amazon is coming to that because we are close to Singapore geographically as the tech capital of the region. Yeah. So what we know about AI is it needs GPU to run. graphic processing unit. Does anyone here not know what a GPU is? Everybody knows GPU? Okay, it's different from CPU. So, but GPU, yeah, sorry. Yeah, exactly. So GPU is like, if data is the new oil for our society, GPU is the new oil that keeps AI running. Yeah, yeah. Without that, AI would not be able to achieve, regenerative AI specifically would not be able to achieve high performance. Okay, so what that means is that it requires a lot of energy. Does anyone here know like what a simple search on ChatGPT, how much more energy can consume compared to traditional Google searches, search results? Does anyone have an idea? How much more? No, okay. Okay, according to statistics, it's up to 30 times the energy use. So AI actually, so global tech and AI actually contributes to about 2%, 1 to 2% of global emission causes. So this is why you see news like Google, Amazon, Microsoft, they're trying to build their own nuclear reactor to power their own data centers. Yeah, this is why we're trying to use it, especially to prepare for the rise of AI applications in everyday use by more people. So what it means is that, yeah, it needs a lot more data centers, GPU data centers. And the DeepIn project that we have, that I've been working on, is basically to support SMEs, small medium enterprises, not the big companies. Like when ByteDance builds its own data center in Malaysia, $1 billion, they're going to control it full time. They're not going to do it in a decentralized manner. So we have to be realistic about it. Yeah? But the demand is so big that right now there are opportunities for SMEs to participate because the demands are so big. Yeah. Okay. So yeah, this is the statistics. I'm not. You can just like look it through. Yeah. Yeah. So what we realize is why do I call it a CPIN and DeepIn? Because in many infrastructure networks, in order to make it sustainable, you still need a combination of the two. Yeah. So there will be things that decentralized solutions can work. There will be things that centralized solutions, it needs to happen. So centralized solutions, for what it's worth, it's got institutional backing. It's got insurances, right? The problem with decentralized solution is that the insurance part is lacking due to the lack of institutional support, understanding about its initiatives, right? Yeah, so I'm not gonna, yeah, basically pretty clear cut. I'm gonna, yeah, I was told we don't have enough time. Yeah, yeah. So basically, data center, the one I was talking about. Yeah, yeah, yeah. Basically, I'm just gonna talk more about CDPIN. Right, centralized, decentralized physical infrastructure network. It's a hybrid model that empowers users to choose between centralized and decentralized solutions based on their specific needs. And it uses blockchain technology and Web3 wallet authorization for identity management and on-chain data log operations. Yeah. So basically, it's a secure, efficient way due to the blockchain technology use. And it runs on Tonchain, which is basically the Telegram blockchain system. Yeah. Yeah, I mean, some graphs that I think it's boring. Yeah.
Is it something like the render?
So it's like this. So the technology provider secures collaboration deals with data centers, right? Yeah. So it secures collaboration deal with data centers. So they are, and then it opens up to VCs, individuals. So if individual investor, for instance, you can rent a fraction of a node. With VCs, maybe there are different forms of ownership, for instance, a token investment, you know, and then or directly owning shares of the company. Yeah, that kind of things. Yeah. 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 I mean, yeah, self-explanatory. I don't want to go too technical. Yeah, and then yeah, also yeah. So it's just basically more reliable. And then it enables more new data centers. So everything doesn't go into like one data centers, which is very dangerous when things don't work. So that's the whole idea of that's part of the appeal to that. Yeah. And because the demand is so big, and because AI is going to stay and it's going to use my energy, there are opportunities for these projects and other deep-in projects. Yeah, yeah. And then I'm not going to go into that. Yeah. So the color is not really helpful, but it secures. It's already secure investment. It's already got collaboration from the government. So basically, it's a project that is it's a model. DeFi is a good model for society to more openly understand the opportunities and excitement that decentralized solutions can bring to solve real-life problems, real-life challenges, especially when it comes to something very expensive such as physical infrastructure networks. Yeah, that governments may not necessarily have the funds, private companies may not necessarily have the funds to do all that without a heavy bank loan with high interest rates. So this is an opportunity for decentralized solutions for everyone to participate with minimized costs when it comes to hardwares. For instance, getting something from NVIDIA, with the latest graphic card to contribute to the system. Yeah, and then this is what I will argue a way that that can help more people to embrace this new technology. It certainly has changed my mind about it. Yeah. Yeah, thank you. Let's talk more about that if anyone is interested to know more about DeepIn. Yeah.
Thank you very much. So, we are going to close with a great applause to you that you stayed until the end. So, clap for your... One or two logistics. As regards the dinner, you got on WhatsApp, Google, and everything is at 8. Tomorrow we are going to start the same time. We are going to leave the hotel the same time. Keep an eye on WhatsApp as regards new updates. Network with each other, be nice to each other, and see you tomorrow.